All right, guys, we're up. Palantir flying up right now. All right, guys. Let me put this up. All right, there we go. I know I'm a little late today. My apologies here. Usually I've been starting later. We got Powell. We got jobless claims numbers. Busy. Honestly, I streamed for like, I don't even know if I count the hours. I streamed for like 7.5 hours yesterday. So, you know, if we start late, y'all will be okay. All right, we got jobless claims numbers today. We got Powell again, Powell number 2. Jobless claims drop in about 2 hours and 4 minutes. We got the SPY up there to 510s. We've got Palantir up there breaking highs. Tesla cracking lows of the last few days. Nvidia all the way up to freaking $900, bro. Dude, Nvidia is going crazy. I'm going to do a poll here. You know, this is why I like, listen, people got mad at me yesterday asking if the market was going to break highs or if Nvidia was going to break highs or if whatever was going to break highs, right? But it kind of did happen, you know? Like, people get, like, please don't blame me because the market goes up, you know? Like, it's not my fault the market goes up. Somebody yesterday in the live stream in the, somebody yesterday in the live stream was like, John, what the heck, bro? Yeah, somebody yesterday was like, yo, what the heck, John? The market keeps pushing up. It's John's fault. I'm sitting there like, what? Me? I told him, like, listen, we could all buy at one time. We could all universally buy something simultaneously. You know, we could all buy something simultaneously. We could all buy the S&P 500 at one point in time. And it wouldn't move that S&P 500 at all. I have no influence. My stream, even if my stream had 8,000 people, concurrent viewers like we did yesterday, we could all buy, and it ain't going to do much to the market. And so the market running up is not my fault. Blame whomever else, but not me, because it ain't my fault, guys. That's all I'm saying. Anyways. Yeah, today we got the second half of the semi-annual monetary policy report to Congress at 10 a.m. We got jobless claims numbers at 8:30. Man, chat. It's early in the morning. Let me drink some coffee. That's what I need today, is coffee, you know? Yeah, you know, listen, TV Tyree, that's just what I do here, brother. You know, I'm just here to, you know, big Papa Pump John, you know, John pumping up the market. That's what I do here, you know. What I told the guy, whoever it was, and I'm pretty sure he was just a troll. Like, I'm pretty sure you get people that, for whatever reason, I make them insecure about something. And so they spend their time obsessively trying to throw me off one stream, which, listen, I mean, I guess I'm flattered by that, I guess, you know, like, listen, but what I told him in response was like, look, if you genuinely believe that, you have no idea how the market works. Like, look up what a float size is. Again, we could all buy Apple at the same time. It's not going to move Apple. The float is, there's too many shares out there for me to influence it. I would love to think I have that much influence, but of course I don't. 330 in Cali. Hey. If I had $300,000 accounts, I could move it a tick or two temporarily. Right, exactly. Like, you're not going to move it much at all. It just comes from a lack of understanding. Palantir flying over highs. Look at that, 27s. All right, I'm looking at the queue. Hi, can you please talk about the upcoming European rate scenario? If they leave it at the actual level, raise it or cut it, what might be effect on the EU? Thank you for your comments. Yeah, I mean, I can talk about basic understanding of Federal Reserve banks. So again, I can talk about basic give me 1 second. I got you. Hold on. All right, there we go. Anyway, so yeah, let's talk about central banks. All right, so ES. Okay, so we got the Euro Bank. I'm assuming you mean the ECB rate decision is what you're probably referencing, is the European Central Bank rate decision. And now it mirrors what we do, what we cover here in the U.S. Rate decisions are simple. Okay, like the boilerplate understanding of these rate decisions is very simple. Okay. What they're doing is they're raising the federal funds rate. By raising whatever they call the federal funds rate over there, they're bringing interest rates up or down when they do so, right? And which interest rates go up or down are going to be influenced by, you know, the length of bonds that they have around everything. And so some interest rates are going to go up almost immediately if it's like really short-term bonds. Others are going to go up more slowly if it's longer term. In terms of prices of bonds changing and stuff like that. This coffee is strong. Good. Anyways, they're doing this to influence interest rates, right? What is the expectation here? When do they do it? What's the date that they do it? What is the date that the ECB makes their decision? Like, I usually cover this. We got the Bank of Canada rate decision. It happened yesterday. Today we have jobless claims, non-farm. Oh, we got the ECB rate decision in Powell. So yeah, this happens. I don't know what they're planning on doing with the ECB rate decision. They should have like an expectation. Okay, so like the rest of the world is very similar to the market. I'm looking at CNBC right now. So the European Central Bank meets today. Inflation is going down in the ECB in Europe, in a slight recovery in economic activity. Some months ago, markets were convinced that the March meeting would be, quote, the one, referring to like when they're going to cut rates. But that's clearly no longer the case. So what is likely now? All right, I'm quoting an ECB watcher, Dirk Schumacher, in a research note. He said, quote, unlike in previous meetings, the question of the timing of a rate cut will now be on the agenda. The updated staff projections are likely to show a downward revision of inflation for this year, reinforcing the signal that the ECB is moving closer to a rate cut. The recent consumer price readings showed a slowdown of headline inflation. So the recent readings showed lower inflation to 2.6% in February, but services were still up, almost 4% for the month, right? And again, quoting Mark Wall of Deutsche, he said, quote, the upside core surprise was in services, which the ECB will interpret as more domestic and therefore more cautionary for monetary policy, meaning they're less likely to cut rates sooner. There's no reason, and again, we're still quoting Mark Wall from Deutsche. He said, quote, there's no reason to think that the short-term pace of underlying inflation has eased. If anything, it might be a little bit stronger. And again, now I'm quoting him again. Quote, the ECB will likely take a cautious approach as it would not want to undo its progress in the inflation fight at the home stretch towards target. Actually, this was said by Holger Schmeiding in a research note. He said, quote, we thus expect the ECB to wait until June for the race cut of 25 basis points. So yeah, basically, the ECB is going to do what the U.S. is doing right now, which is pause rate hikes. They're not going to raise rates. They're not going to cut rates. They're just going to pause rate hikes until about June, when they start to consider rate cuts, is most likely what's going to happen. So their monetary policy is now mirroring ours in that way. I hope that makes sense. Hey, what's up, Lo-Fi? Good morning from Australia, 9:30 p.m. here. Great to listen to your commentary. Makes a lot of sense. Hey, thank you, John. Will you cover Kroger earnings? Yeah, I got you. I'll cover them. Yeah, appreciate it, Lo-Fi. Hope you're doing well, brother. Kroger drops at 8 a.m. American Eagles drops at 8 a.m. Burlington drops at 6:45. Big Lots at 7. Sienna at 7. Bit Farms at 7. But yeah, Kroger's the biggest one. It drops at 8. It's not really a super big one, to be honest. Oh, man. Some people in this chat think way too much about certain data points and variables. It's usually not that deep. I mean, it is deep. Sometimes they have a big influence, sometimes they don't. Broski, what would Jerome Powell talk about today? No idea, bro. He's gonna get interviewed by the Senate now. All right, so like here's a way to understand these. Okay, Look up who holds the majority of members in the Senate. Which party has the majority? Alright. Yeah, we're looking. Congress. So the Dems have most of the House, or the congressional seats. I hate this about crypto YouTubers. My advice: stay away from trades and invest in spot and hold your coin and don't exit. Don't be exit liquidity. Yeah, you know how it goes, brother. Nice Blaze. What's up, Beach Bum? Yeah, I mean, I think the crypto market is pretty similar to everything in that, like, you have to understand it like this, okay? You're gonna have people trying to pump up, like, the only thing that gets clicks and views is sensationalism. So if you tell people, hey, this crypto coin or this token is gonna 1000x, just watch, you know? You might get more views than if you say, hey, this coin could be good. You know, like there's a difference. What are your thoughts on people claiming they make a living from betting? I think most of them are full of crap, dude. Like most of them are just trying to start businesses. And I understand that as a business person myself, like I really do, right? But I think like you got to understand most people that bet on sports lose money. It's similar to trading in that way. The problem is that sports betting, like, okay, people selling picks in sports betting is the sleaziest business you could ever get involved with. The thing to understand is that if you're actually a good sports bettor, that consistently makes like enough money on a platform, you're going to get booted off of that platform so quick. They're going to send you a letter saying, hey, we don't want your action. You know what I mean? Like they're literally going to send you a letter saying, yo, we don't want your action. Like you're, you know, like we don't want your action. Like you can't bet more than $5 a game on our platform anymore. That's going to happen if you're good enough. You know what I mean? And so if you haven't been booted off the platform, you're probably not that good. And so people selling picks as a service, you know, usually what happens is like they got wrapped into it by somebody else, and then that person got wrapped into it by somebody else. And so they're just kind of keeping that chain going. And like, again, I'm not saying this is all of them. I'm not saying there's outliers. There's not outliers. I'm sure there's some people that are genuinely good at sports betting. Usually the pros in Vegas do it where it's legal and they take a spread approach where they're looking at the spread. They're kind of trading it almost, but they're doing it where it's legal in the casinos. You know what I mean? Like, you're not going to be able to do it online in most of these sports betting platforms and get away with it easily, you know. And so the people that claim they are usually just lying to try to sell packages of nonsense, is what it is. All right, guys. So what's up, IV? All right, chat. Hey, we got congressional testimony with Powell today. We've got jobless claims numbers at 8:30. We got an hour and 40 minutes until jobless claims numbers show up. We'll put this out. Jobless claims are expected at, let's see what they're expected at. Wait, today's Thursday. Jobless claims expected at 217,217K. Honestly, yesterday's stream almost got us up to 130K. We're almost there. We'll hit it today almost certainly. So we'll hit it today almost certainly. Yeah, Tesla's dipping down a little bit. Palant here at 2730s. Yeah, I think it depends on like how you look at Tesla, right? Like, I think people have to understand the pros and cons of Tesla, right? Tesla, okay, if Tesla fully implements FSD and gets that regulation through, they are going to be on the forefront of full self-driving, which I truly do believe is going to be the future of technology and driving. I think within 10 to 20 years, cars will drive themselves. And I think once that starts to happen, it's going to snowball. And if Tesla's on the forefront, they're going to do very, very well. Very, very well. I think this is something that Elon recognizes already, especially with AI getting really big and AI taking off. I think that's the future of cars. But who freaking knows? I might be wildly wrong. Maybe, you know, the risks, like, I'll give you the other side to it. The risks on the other side are like this, though. The risks are if regulators don't approve it, they don't like it, there's too many speed bumps, they refuse to go forth with it because of big legacy automotive, you know, brands, and, you know, for whatever reason, it just doesn't happen. I still think Tesla will be okay, but in that regard, in that situation, I think it's certainly more vulnerable. But yeah. Yeah, and we'll see. We'll see. Yeah, Jerome. So Jerome speaks again today. Might as well take a bus if someone else does the driving. Yeah, but that's silly. Okay, like that's the worst argument you could ever give. You want to know why? Because having a car with FSD is like having your own bus. Like imagine having your own bus where you don't have to wait in line, you don't have to go to other stops, you just program it and sit in it, and you can sit and hang out with other people in it. You got your own bus. That is why it's going to change automotives if it happens. The question is whether it happens, right? And I'm not somebody that like doesn't look at it objectively or doesn't try to look at it objectively, I'll say. I think there's certainly vulnerabilities if it doesn't happen to Tesla. I think regulators could certainly mess with it and not push it through. But I think if it does happen, and I think even if it gets anywhere close to happening and Tesla's on the forefront, it's going to change automobiles and technology without question. Infrastructure will eventually catch up, just like every other technology growth part of history. Infrastructure will always catch up, but it'll change the world if it does, if they're able to do it. And if Tesla's on the front of that, they're going to do really well. I think it'll probably happen as well because I think it's on the future of technology, and I think it's the obvious path with AI and everything else, and I think Tesla has done the most work on it, without question so far, right? So I think there's a very good chance it happens, and that's why I'm bullish in Tesla long term. But again, you got to look at the vulnerabilities as well. Yeah, I mean, I think it's relative. I think you might be looking at your own specific situation, Ponzi, and I don't think you're looking at it objectively. Where I am, in the city that I'm in currently, everywhere I look, I see a Tesla. Everywhere I look, there's so many Teslas here. Like everywhere I look, I see a Model 3, I see the Plaids, I see the SUVs, the Tesla SUVs, the X or whatever they're called. I see them everywhere I go. And so I certainly think people, at least a decent amount of people, can afford them. Yeah, so it'll be an interesting thing with jobless claims. Right, yeah, for sure. Yeah, no offense, Ponzi, I just think it's a bad argument. Number one is that Teslas are cheap. Or not all of them are cheap, but some of them are cheap. Like, cheap in price. Like, you're going to be able to get Teslas for less than $50K now. Any new car right now is hella expensive. I bought a SUV. It was a lot, over the last few years. But, there's cheaper Teslas. Like, you can get Teslas now for $40-50. And the good thing about software, like full self-driving, which is purely software, right, is that you can add it to the old cars as well. So people could buy used Teslas and still get FSD in it. And so that's not a restriction for it at all. You know what I mean? Okay, we have a loaner right now, like a loaner car. One thing that you see in this loaner car is you see Tesla has changed the way cars do interiors. Okay, what I mean by that is that Tesla, like 5-6 years ago, started putting these huge screens in cars, like these big screens in cars. They were really one of the first people to do this, where they put these big iPad-looking screens in your car, and that was the console in your car. You can mess with it, change it, set your GPS, all that good stuff. They did it before anybody else did it, right? Now most of the modern brands have adopted the same exact thing. Like, we got a loaner car that was it's a new car. It's like a 2023. It's got the same thing as Tesla, a big screen in the middle. And so most cars are gonna have that. Like, most cars it's not a luxury. It's something that's gonna be included in most modern vehicles, you know. And so I think even if cars, even if it's not a Tesla, I think some of these brands are still going to use Tesla's FSD software to get it done, you know. Hey, nice G. Yeah, I think some people are just emotional. I think the market's gone up a lot, and bears who are either shorting the market with put options or that missed the big run are now, well, there's a lot of emotional ones. I think you also have some people that just hate on stocks, like they just hate specific stocks. Sometimes it's like politically related. Sometimes they just kind of get wrapped up in hating a CEO or whatever. Sometimes they get political when they watch the news, and so they think the sky's always about to fall or whatever it is. Again, it is what it is. Like, you get a lot of different types of people here. Yeah, look at Nvidia here, chat. Nvidia up to 900s. Crazy. This is crazy. AVGO. Yeah, when are their earnings? Are their earnings this evening? Yeah, I think some people are just more emotional, Matthew. You know, it's how it goes, bro. Stock market, again, if you find, like, I see typically the worst traders in the world are people that are super emotional about different things, where they get mad. Like, you should never get mad if the market goes up or down. You know, it's just the market. You know, markets are going to go up or down. That's the inevitable state of markets, is that they go up or down. But you find people that are overextended, that are super politically biased, that are all these different things. Typically, they make the worst traders because they get so emotionally wrapped up in either one direction or one specific stock that they just don't see things clear enough. And again, this is coming from somebody that thinks the market could fall. I think the market could come down. I think the market could be extended. I'm not really buying up any big positions right now at all because I don't trust the market in that way. Especially this week, next week, inflation data. The week after that, FOMC. The week after that, we got stuff. So the following weeks are going to be really busy leading into earnings season. Yeah, Target all the way up to 170s. That was like, again, man, I tried to tell people when it was down at like $100, bro. People, again, this is a prime example. I bought this when it was at like $100. I wrote it up to like 140s or something like that. I can't remember exactly where I got out, but I wrote it up a big percentage. And again, this is one of those stocks where when I bought it, everybody was making fun of me. Everybody was telling me and blah, 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 blah. People tend to overestimate weakness in companies with confirmation bias. Like companies they want to fail, they overestimate weakness. And so you get a lot of people trying to morally trade or whatever it is in their head. And I like Target. Every time I go to Target, super busy, super packed. I spend, I'm spending money there every time I go there. And yeah, I think Target makes tons of money. And so as a stock, they're doing really, really well now. And they were at $100 in November. Express, man, you could tell this one was about to fail. Express, nobody's ever there. Now, they're still around. They're live right now. They're on toss still. Express, the clothing brand. Nobody wears them anymore is the problem. Just nobody wears them anymore. Do you see much value in Apple? Long term, I do, Nathan. Short term, there's risks, of course. It's the plastic, Matthew. That's what it is. That's what you smell when you go in Target. It's plastic. All right, Palantir dipping down. I'm in Palantir right now. Yeah, I'm in gold. You love to see it. It's up. Gold's rising. Long bonds. All right, we got over 300 people here. Get ready for jobless claims numbers to come out too. Cool. Yesterday was a fun stream, though. It really was. One of your top 3 streams ever? Yeah, it was chaotic. Is it actually good for some of these companies to dip and become more attractive to buyers? To a certain extent, yes. I mean, corrections and dips are healthy. Like stocks that go up straight up very rarely hold. They almost never hold. And so for a company to pull back and correct a little bit before moving back up is healthy. It's good for it in that regard. Like it needs to happen. Companies that just go straight up typically are not going to hold those gains. Not always though. I mean, you have outliers. There's always outliers. Like you always have, there's nothing that's 100% always one way in the market. You always have outliers, but in general, yes. Chat was crazy, man. Yeah, I don't necessarily like or dislike Elon. I disagree with how Elon has been on social media as well. I've disagreed with a lot of what he says. I think he's too controversial. I think he's too political. And I think that's bad for business, personally. So I'm not one of those Elon fanboys. I'm really not. But I think if he positions himself correctly with FSD, Tesla could do really well. But I don't know how long he's going to be the CEO regardless. And I think he'll eventually get kicked out. And maybe not kicked out, maybe he'll resign. Oh, he blocked some people for sure. I block people too. Yeah, we had people getting mad. Again, they were getting mad at me they were like, John, the market moved up. What the heck, bro? I'm sitting there like, guys, we could all buy at once. It's not gonna do anything. Yeah, right now the big Apex sale is $35 resets. This is incredibly powerful. Like $35 resets is useful. The reason it's useful is because you could buy like the 300K challenge on Apex for 71% off, and then it only costs $35 to reset that thing. That's why it's useful right now. People underestimate how powerful only $35 resets are. Like this is the time where you buy big accounts, in my opinion. Like if you want to, you buy big accounts with this. My spot's already done 5x. Should I hold still or get out for new? I have no idea. Generally, if I'm up big in anything, I usually take at least a little bit of profit. Yeah, I think one of the effects, Jared, of the GameStop short squeeze and short squeezes like it, is that retail, especially like young retail that doesn't know any better, thinks that everything is squeezable, that we can pump everything, right? And I think they don't understand what a float is. They don't understand large float versus small float, squeezes versus regular. They don't understand any of that stuff. And so they just think that everything is manipulatable and influenceable, and it's just not. We could all buy Apple at the same time, it ain't doing much. We could all buy the SPY at one time, it ain't doing much. And so if you find yourself getting mad at me because the market's going up or down, you're being too emotional and you're copying somebody that legit tells you not to copy them. Please don't copy me. Remember, guys. Remember, okay? I am terrible at this stuff, have no idea what I'm talking about, and am wildly wrong about anything and everything I say. Do not copy me. Burlington results? No, I didn't see those. Burlington will eventually fail. Like, I just think the margins have got to be really small. They got to be really tight margins here for Burlington. I think they will eventually fail. They're one of those brick and mortar stores that I don't see resiliency for. Yeah. You seem like a smart dude. Haters gonna hate. Yeah, we try. Market's just emotional, brother. People are just emotional, man. Especially the ones that are getting mad at me. The market's pushing up. Like, people call me a permabull. I'm so bullish. My big thing is telling people the market doesn't have to crash. And so if anything, if the market's been pushing up, you should thank me because I was kind of right about it. But people get weird. It's how it goes. Ew. What's up, dude? Yeah, thank you, Khan. Appreciate it. Yeah, crash is a part of the market as well. The market will eventually crash, without question. It's inevitable. It's going to happen. The question is when it happens. You know, and again, we're already kind of reeling back from a mild correction in 2021 and 2022. And so it's just less likely the market's going to crash right now. But NVIDIA might influence that. Again, we are in a period of quantitative easing. Quantitative tightening, in which the Fed has been reducing their balance sheet, more hawkish, trying to bring interest rates up and reduce inflation. And so we have been in that period, and theoretically the market wouldn't react as rosy as it has been lately in quantitative tightening periods. But again, people don't really care about that as much right now when tech, and specifically NVIDIA, are ripping up and raising the market up as well. So it's interesting. Do you guys know any AI where I can give them an image of me and have them edit the image of me? Anybody know? I mean, I know I've been playing with Dolly. Let me ask it. Let's ask it. Hold on. I gotta find pictures of me. Gotta find a picture of me. Okay. Oh wait, it's doing it. It's doing it. Hold on. It's doing it. Chat GPT-4 might be able to do this. This is the image it gave me. I mean, it's not really me, but that's okay. Listen, you know. Let me find a picture here, guys. Hold on. I know I got pictures of myself here. Hold on. Pictures. I got some pictures. All right, here. All right, so again, Palantir dipping down a little bit. NVIDIA's still at $900. The question is, does it hold at 900? Kroger releases at 8 a.m. Yeah, I'm trying to. Squire AI. Kroger releases, I believe, at 8 a.m. If it put up before us a picture of Forrest Griffin in a leather jacket, I'd have been, man, shots fired by AI. Okay, all right, guys. This is what it's giving me, okay? This is what it's giving me. I asked it to put me in a leather jacket. This is what it's giving me, okay? I might as well be saying A somewhere. Alright. We're still playing with AI here. Sorry, guys. Yeah, NVIDIA up a lot, man. A lot. We'll see if it holds, chat. Sorry, I'm about to take a picture of myself here. Hold on. Alright. Bradley Cooper, hey, I'll take it, you know. Jobless Claims is at 8:30 Eastern Standard Time. Yeah, it's at 8:30 Eastern Standard Time. I can crash NVIDIA single-handedly. For whatever reason, it thinks this is me. Okay. You know? I mean, I'll take it, you know? But my hair's not that curly. I mean, I guess it is kind of curly. But it's just not quite right. PE ratio for Supermicro. Thoughts? I would think a split for NVIDIA. What's the PE for it, Supermicro? I'm asking Dolly, ChatGPT, what's the PE ratio for Supermicro semiconductors? Let's see if it gives it to me. As of March 1st, it's 6820. It did give it to us. ChatGPT's hella useful. Is Jerome Powell going to ruin the market? I don't know. 68 is what I think the PE ratio is. Alright, so I'm asking it to write me a script. Yeah, GPT-4 is pretty solid. So I'm having to write me some code. Tesla could be 130. It could be 500 as well. All right, guys. And again, jobless claims numbers today. Jobless claims are unemployment filings. How many times the market... or jobless claims unemployment filings are basically a weekly report on how many people are filing for unemployment, right? Like how many people are filing for unemployment. Hey, Beach Bum, is GPT-4 better at coding than the previous one? Like, I'm over here playing with code. Let's get a new one. Okay. Let's try this. Add to chart. It freaking worked, dude. Okay, dude, cheap chat. Okay, it did work. GPT-4 is much better than the previous one, bro. Wow, it did freaking work, dude. That's genuinely impressive. So GPT-4 is much better than the previous one that I've messed with. That's what I did. I said realistic photo. Yeah. Best method for me was this is the code I used and here's the error received. Yeah. Is jobless claims a weekly thing? Yes. It's jobless claims unemployment filings. So we got over 400 people here. Yeah, what they don't use for the public, I'm sure, is really good. I'm waiting for SOAR to come out. SPY just broke highs of the day. So SPY just got up to 511.40s. Palantir bounced at the 200 EMA. NVIDIA still bouncing up to 903s right now. 903s. Let's try it on ThinkScript, shall we? Alright, let's try ThinkScript. Let's see if it does TOS. We're gonna try TOS. Alright. Alright, so here's ThinkScript, right? So this is TOS. Let's try it. So it worked, no errors. Wow. It worked. Look. This is identifying hammer candles. Every time a hammer candle shows up on the chart. Look, hammer candle, hammer candle, hammer candle, hammer candle, hammer candles. Let me adjust it. All right, so I told him to adjust it so it shows up on the actual chart, not below in true overlay. Also change the candles to where a bearish hammer candle is alert is red and a bullish hammer candle is green, is what I'm asking it to adjust it. But so far, that's pretty decent, honestly. Like, this is not too bad, right? It's showing me hammer candles. So here's it fixing it. I asked it to show it for the last 24 hours. It's still writing this code. It needs to be in true overlay, so I might have to mess with it. Let's try this. So we edited it to do in true overlay. So again, no errors here. Nothing showed up on chart. So I think it's on right now, but I don't know if anything's shown up. Okay, let's try it again. I think it's on the chart already, I just can't see it. Yeah. What time does Powell speak? Powell speaks at 10 a.m. At 10 a.m. Eastern Time. Okay, so yeah, it's fixing it. Man, AI is so freaking powerful right now. Alright. This is what people don't understand about AI. This is why people are like, hey, AI didn't work, or whatever they're trying to say. Wow, dude, look at that, bro. That is, dude, this one is so much better than 3.5. So much better than 3.5. Wow, dude. Okay, here. Let me update it. Oh crap. Here, let me stop. Okay, so again, I had it fix this code, right? Like, I had it fix this code to do something more. Let's see. Wow. Impressive. Genuinely impressive. I'm gonna leave this on my charts. I'm gonna leave this on. Wow. The crazy thing, this is step one. Yeah, it's only gonna get so much better. All right, so this next one I'm doing here is combining the 200 EMA. I'm gonna do it on a different chart so I don't mess this up. I'm combining the 200 EMA and the volume weighted average price, and I am turning it into its own version, its own custom version of an indicator. I said to make it orange. Ooh. So much better, dude. So much better. Wow. So look, it combined the 200 EMA and the VWAP and gave me one specific line right here. Look at it. So it actually like held. Look at this. Look at that. Interesting. Companies are going to implement AI as fast as they can before. Yeah. Yeah, GPT-4 is just much better than 3.5. I was messing around with 3.5 trying to build code with it, and it just never worked. Yeah, I don't know if you can make laws to stop it. I really don't. Powell speaks at 10. Jobless claim numbers. Wow. Yeah. All right, so Palin's here pulling back. Nvidia's still there. I want to save this code. I also want to add an engulfing candle. All right. Yeah. Okay, so I want to do engulfing candles as well. Sorry, Alright, so working on the last update for these candlestick symbols. So this should post both engulfing and hammer candles, abbreviated with text, as well as changing the color from both red to green and green to red. I want to leave this previous one up on the right, but I'm going to save this code because I will use this on TOS a lot. Okay, so here's the full code. Let's add it to TOS. Let's see. You know it's good when there's never any errors here. That's really solid. To never have any errors is actually really impressive. It worked. Okay. Look at this. So it worked. Clouds up the chart a little bit, but... engulfing, hammer. Clouds up the chart some. Let me update it. Alright, so I just updated it to make it a little bit more strict, so it's not like showing me 1,000 different ones here. So bear with me, guys. I'm editing this, trying to create a good indicator set. I forgot which one this new code is, but it's alright. We'll build this. Okay, so I forgot. I copied it too early. Okay. Much better. Yeah, look at the hammer. Boom. Alright, so I gotta figure out which code is which. Alright guys, so we also have some news coming out. Okay. Okay, that's why I was double posting. Alright, so with the hammer candles, engulfing, hammer, bearish hammers. All right. All right, guys, so I'll probably stop messing with these codes. I'll do this later. Does Tesla have a future? Tesla goodbye? I don't know. I mean, again, it depends on what you think Tesla looks like into the future. It depends on what you think Tesla will look like in the future. I'm not sure. Powell doesn't speak at 8:30. Powell speaks at 10 a.m. 10 a.m. Yeah, I really am like a kid in Christmas. I'm gonna be using GPT-4 a lot more. See, the only problem it has is that it's not identifying bullish and bearish hammer candles correctly. Right? That's the only problem. So I'm asking it to fix it right here. This is what I'm editing. Like it's saying Alright, so we gotta, this is the first time it's glitched this entire time. Okay, Alright, so it's running. How did you interpret Powell seemed dovish to me? I don't know. I think it depends. I think it could be either. I think you could interpret what he said. You know, he was getting interviewed by Congress, and so whether it was bullish or bearish, dovish or hawkish, we don't really know. You know, it really depends on who he's talking to. You know, it depends on which side. Huh? Alright, so we got this code. This is about as close as... There's still some errors here, but I'll let them go. We got hammer candles, engulfing candles. I made it much more strict in nature. Now, it's really early. I think if we look at something like Palantir... The engulfing's right, hammer candle. Look how well this does, though. So this is actually genuinely impressive. The problem it's making here is that it's misidentifying hammer candles. Tesla needs to sell. Full self-driving is going to be big. It's been crazy the last few days. Yeah, Matthew, I'm just going to say this. You know, I'm going to say this just because I want people to be careful. All right. I'm not saying you're like this either. And again, I appreciate you being here. I appreciate you contributing to the chat and all that good stuff. It's all love here. It really is. All right. Just listen. I'm saying this because I've seen it so many times with other people where they come in, they're really nice, they talk about how much money they made doing one specific thing, then they start asking people to either message them, and they'll either try to scam them or send them to their own content. And so as long as you're not doing either of those two things, you know, you're welcome here, bro. We appreciate it. And yeah. Please don't take offense. I'm just trying to be careful, I guess is the easiest way to put it. Alright guys, so again, we've been messing with these studies, man. Again, I'll tell you this, GPT-4 has gotten really good. Really good. trying to fix it so that it identifies proper hammer candles. I don't know what happened. There you go. That's much better. Yes, correct. Good. Okay, I got it right. GPT-4 finally got it right. Yes, this is correct. Right, and again, you can kind of see why we use hammer candles. All right, like this is correct. It gives you, now, because again, you can kind of see why. It needs to be a little bit more strict, but like look at the hammer candle pattern here. So you get the hammer candle. This is why this is powerful. This is why I've been spending all morning trying to build this. Is because look at this. Hammer candle, beautiful bounce up. Inverse hammer candle, you get a little bit of a dip following it. And so this is only really working for very short-term price action. Like very, very short-term price action is what this is going to work for. It's not really going to work long-term in a super effective way, but it just depends on the time frame you're using, right? But this is much better. I need to save this because this is the correct code. Now, it's not showing me engulfing candles, but I'm just going to save this for hammer candles, and we'll do our own separate one for engulfing, and that's fine. All right, so we got the hammer candle one in the books. That's cool. And so we could actually add this, implement this one here. We'll take this one off. We got the moving average influence, exponential, apply, and then we'll add our own study. Where's mine? Oh, there it is. It's not about verifying yourself. It's not about, it's not about verifying yourself, Matthew. It's all good, brother. I have to be very careful. Again, what I see a lot of the time here. Again, I'm not saying you're not whomever you're saying you are, right? What I'm saying is, like, I get a lot of people here, and, like, think about it from my shoes, right? People, I have a rule that, like, people can't self-promote. It doesn't matter who they are, right? People can't come here and self-promote, right? It's one of the rules. Too many times, because if I allowed that, what you get a lot of the time is you get people pretending to be like, they're like, hey, have you seen Billy Bob's trading channel? It's the greatest trading channel in the world. And then they'll sign in with another account and they'll be like, you know Billy Bob too? Kindly go to youtube.com/BillyBobTrading. You know what I mean? Like, that's how it goes, right? Like, that's how it goes. And so to protect everybody against nonsense, I have to just make it a rule you can't self-promote. And so sometimes people try to get around that rule, and they'll make friends. They'll be like, hey, guys, you're so great. Oh, thank you so much. You're so great, too. Hey, you want to message me? And then when they message them, that's when they start promoting, when it's in private, so they can hit them with courses or scams or whatever it is. And so I just got to protect people against that. That's what I'm saying. Aside from that, as long as you don't do any of that stuff, it's all good, bro. Do whatever you want. Yeah. All right, I gotta save this this study. All right, I gotta add. I'm gonna add I'm trying to create a study set here where it's the 200 EMA. Make it yellow. All right, so there's the 200 EMA, there's the hammer candle. I just want to get the VWAP in there, and then we're going to save it as our own study set. Trend studies. There it is, VWAP. We're going to have to undo these upper and lower bands. I'm going to make this purple. Actually, we'll get better on there. Purple. Alright, and then we're going to save this study set. Boom. Alright, so we got this study set here. Really nice. We'll take it. Palantir holding here. NVIDIA up to 902s. Yeah. Yeah, Billy Bob definitely top 3. Yeah, you go to the trading channel and this, you know, you got this man showing up talking about, you know, the greatest trader of our generation, guys. The greatest trader of our generation, all right? You know? The greatest of all time ever in the world. Billy Bob's trading channel. All right, guys. Hey, we got Palantir consolidating. I'm going to put the Q up here instead. See what the Q's been doing. Here's a 5-minute chart, hammer candles. It did finally get the inverse ones right. Should I make this more strict, I think, right? Maybe I should make this more strict. Let's do a longer term chart. Here's a 10-day chart up. I mean, on a 10-day chart, look at the Q on a 30-minute chart, actually. Like, look how... It looks pretty good. Like, look at this. Called below. Beautiful bounce. I'm sure when volatility gets a little bit better, it could be even more powerful here. Should I make this more strict? Maybe not. Engulfing candles are really the powerful one. Let me see. So I already had one. Fed data soon. So we have jobless claims unemployment filings coming out. Any earning plays? So we have in about 8 minutes we have Kroger earnings dropping. In about 8 minutes we have Kroger earnings coming out. Hey, sorry to hear that, David. Alright, so now we're going to try to add engulfing candles to this. Let's see if it works. Scroll up, make sure there's no... Hey, this is 1 minute. Let's try a 10-minute. Not bad. Like, look. Look at these candlestick. Look how powerful this is. Look. Not bad. I'm gonna have to try this on other stuff like the NASDAQ futures contract and stuff. We'll see. So we got the Fed speaking, SAR, today at 10 a.m. We got Big Papa Jerome Powell speaking at 10 o'clock today. So we got a lot of stuff happening. Jobless claims drops at 8:30 Eastern Standard Time. Added the time so you guys can see it. Kroger drops it again. 6 minutes, team, until Kroger drops 6 minutes. Did I do a poll today? I guess I didn't. Again, 6 minutes, team, until Kroger. Ouch, bro. I'm yelling in my own ear. Yeah, so does jobless claims come in higher? Or how about, does the market want higher or lower jobless claims? Again, the question about higher and lower makes sense because of this, right? So let's talk about it. Okay, so right now the Fed is in a period of quantitative tightening, hawkish. They want to push interest rates up so we can reduce inflation problems, right? Like that is what a hawkish Fed means, is they want a restrictive monetary policy in which they want to reduce interest rate, or they want to bring interest rates up, discourage spending so that inflation goes down. Now we've been in this period, you know, after 2020, where we had what's called quantitative easing, in which the Fed comes in, buys a bunch of bonds, injects liquidity into the economy to bring interest rates down to almost zero in 2020. They also sent out stimulus checks. They also reduced the federal funds rate. All of these things, which is a dovish Fed, which a dovish Fed means they're trying to bring interest rates down. That happened in 2020 to try to save the economy. And the logic of that is that when interest rates go down, consumers have more money to spend on other things, right? Like that's the economic machine in the Federal Reserve, is that when interest rates go down, consumers have more money to spend on other things, thus stimulating the economy. And in 2020, we needed that. We also got stimulus checks. Again, the interest rates went down to almost zero. And so one of the consequences of all that influx of spending, you know, because again, when interest rates are almost zero, what happens? People buy more. They have more money to spend. If you're paying $1,000 in your mortgage versus right now, which would be like $4,000, you're going to have a lot more money to spend on other stuff, thus stimulating the economy. You're going to get more loans. You're going to be more willing to get money, to be lended money and all that different stuff, because again, interest rates are low. One of the consequences is inflation. Prices go up. You know, Rolex prices doubled. Bernard Arnault, super rich now. He was rich before, but now he's one of the richest people in the world because luxury goods prices went up so much because businesses raised prices from the influx of spending that we got from a dovish Fed, from quantitative easing in 2020. Again, the Fed's tool to combat that on the other side of that is called quantitative tightening. You know, quantitative easing is when the Fed's trying to they're trying to sorry, the word is going blank. They're trying to bring up their balance sheet. They're trying to increase their balance sheet. Sorry. I don't know why I couldn't think of that word. They're trying to increase their balance sheet. And again, that injects liquidity into markets and stuff like that. The other side of that is quantitative tightening, which means they're selling off bonds. They're reducing their balance sheet. They're trying to raise interest rates to consumers, along with Fed decisions like rate hikes, you know, raising the federal funds rate, which is the amount banks charge each other to hold money and lend money overnight. It trickles in the other interest rates eventually. But those rate hikes are designed to bring interest rates up to reduce spending, because again, if you're paying more in interest rates, if you're paying more in a mortgage payment, you're going to have less money to spend on other things. You're going to be less likely to get loans and mortgages and all loans altogether. And that's going to make prices go down, because when spending stops, businesses have to lower prices to compensate for it. That's the economic machine in the Federal Reserve. And again, the Fed coming through, and most of the time it's not direct QT. Most of the time, it's not direct quantitative tightening, which would be directly selling bonds, reducing their balance sheet directly. Most of the time, it's what's called passive quantitative tightening, in which the Fed is instead just allowing their current holdings to mature and expire and run off their balance sheet. That usually gets the job done. Usually, you don't need direct QT. Anyways, we've been in that period of quantitative tightening with what's called a hawkish Fed, which again just means they're a restrictive monetary policy in which they're trying to bring interest rates up. Or at least not trying to bring them down. And so we've been in that period since 2020, essentially. And the question is, when does the Fed pivot out of that? But you can imagine, basically with rate cuts, when does the Fed decide that inflation isn't as big of a concern and we start to actually cut rates? The base case is sometime this year we're going to cut rates, but we don't know when it's going to be. Some people expected March. I expect June plus for rate cuts to actually happen. And so again, if you want to know when interest rates are going to go down, it's probably when the Fed pivots to that rate cut mentality to that quantitative easing, not quantitative easing, but ending QT mentality. And again, we don't know when that's going to be. It depends on where interest rate or where inflation is, whether it's under control or not. Now, with all of that stuff in mind, looking into jobless claims, which is how many people are filing for unemployment, jobless claims, again, can signal these things. What does it signal? It signals spending. The more people that work means what? More spending. And so conventionally, low unemployment is good. More spending and economic growth and GDP growth is good conventionally, but in a period of quantitative tightening, a period of a hawkish Fed and inflation problems, that's not necessarily the case. And so what we could see is the market and the public reacting positively to higher jobless claims, to less people working, to more people filing for unemployment. I'm not saying I agree with it, but in that regard, we could see those type of reactions today. And so with jobless claims expected at 217, if we come in higher than that, again, there is a chance the market reacts positively to it, even though that ultimately signals less people working, more people filing for unemployment. And so that's the current market we're in. Jobless claims, again, though, is a weekly reading. This is a weekly report. This is a report that drops weekly, and so it's super nuanced. It's not definitive. We don't know exactly what this is going to be. We don't know how the market's going to react to it. We're going to try to react to it, whatever it shows up as, and again, ultimately, we'll have to wait and see what happens there. Palantir bouncing up. We got the Q bouncing up. We got Nvidia bouncing up. But yeah, that's why I'm asking this question in the poll is, what does the market want? Does the market want more spending, less people filing for unemployment, more people working, or is the market still deeply fearing inflation in which they want less people working, less people spending, less inflation problems? Hope that makes sense. Kroger just reported, Kroger just showed $1.34 EPS versus 113 estimates, revenue of $37.06 billion versus $37.11 billion. So a miss on revenue, a beat on EPS, mixed results here. Here's Kroger numbers in chat right there. We'll also take a look at it in the middle. Here's Kroger. Kroger, bouncing up, dare I say, ripping up to 5250s. Nvidia still testing that 901 level. Oh yeah, well, those checks certainly pay. Said most of that comes because of stimmies. 100%, right? It's all. When you hear quantitative easing, you can just think money printing, right? It's basically printing money to try to save the economy and induce spending. Quantitative tightening means burning money, basically. It's really just trying to bring interest rates up and reduce the balance sheet of the Fed and take liquidity away from the market. But yeah. Buying a Rolex during times of high interest rates makes a lot of sense. I mean, it depends on how much money you have, Daniel. It really depends on how much money you have. I bought a Rolex a couple months ago, and for the Rolex that I have, I got in. I thought they had corrected a lot. I bought my Rolex in a period of time in which we had big pullbacks in the Rolex market. If I look at, I bought my Rolex in November, and I got in damn near at the bottom. I'm super proud of this trade. This is a trade I got in too. Like, look, if we look at this here, let me find it. I got in almost at the bottom here. So I got in. I'm gonna take the price away because I don't want you guys to see how much I paid. But I got in right here. That's where I got in. And again, it was kind of a trade. Like, the reason I bought it is because I thought prices might go up. We had already dropped big percentages leading up to this. And so in that regard, I caught it. Kroger bouncing up, breaking highs again. Yeah, this is an old playlist I built. Yeah, so Kroger up to 53.20, still ripping up here. Still making moves. Kroger still bouncing up. Nvidia starting to pull. Apple bouncing back a little bit today. That's nice. Tesla down still, though. Yeah, what do you guys think jobless claims numbers are going to show up as today? Expectations are 217,000. They drop in about 24 minutes. About 24 minutes. Snow bouncing up a little bit too. Yeah, man, the internet's just freaking weird, man. Look, I'm not trying to hate. And again, if you haven't already, check out Apex. The benefit right now of Apex is a funded account program in futures. So you can day trade, short, buy market, buy bid, sell the ask in futures. There's no PDT restrictions in futures. You can day trade, short, all that good stuff. That's the benefit of futures, is that there's no PDT rule. I can day trade essentially the Q, essentially the SPY. The price is going to be different, but the price action is exactly the same. If I put up the NASDAQ, price action is exactly the same here. This is a 30-minute chart. If I put up a 30-minute chart, it'll look identical, right? Like, look, it'll virtually look identical. Look. Same price action. Look, red candle, two red candles. It's the same price action. I can day trade this middle one in futures, no PDT restrictions. It's open in pre-market. I can use market orders in pre-market. The patterns are very similar to blue chip stocks, but there's just no PDT rule. Apex right now has a 71% off sale where you can get all their packages for 71% off. What they do is they give you a demo and they test your skill. And remember, chat, almost all day traders lose money. Almost all day traders lose. And so if most day traders lose money, especially in the beginning, why put up thousands of dollars yourself trying to risk that? It just simply doesn't make sense. I know everybody thinks they're going to be the outlier who just somehow takes whatever. At least learn how to trade on a funded account program first. What they do is they give you a demo and they test your skill. If you can pass the test, they fund you the same amount as the demo. The base one on Apex is only $25,000 funded account, or it's only like $25-$30 I think for the 25K funded account. They give you a demo. If you can build up $1,500 in profit on a 25K demo and follow their rules and conditions, they fund you 25 grand. You get to keep your first $25,000 in profit. Afterwards, there's a 90% split. And so if you end up making 20K, Let's just assume it's 90%. You're keeping 18,000 of that. They're only keeping 2,000 since they're funding you that money. It teaches you how to trade under pressure. And the benefit right now is that resets universally are only $35 right now on Apex. Only $35 resets. So what that means is that you can get one of the big accounts. You can get the 300K combine where if you pass it, you get $300,000 in funding. And it costs a couple $100 to get it. But you can reset it for $35. It's the best deal in the game right now. You can only it only costs $35 to reset the $300,000 combine right now. That's the big sale going on right now. It's $35 resets universally. A lot of people don't realize how beneficial that is. Like, that's crazy beneficial. Again, if you sign up, they're a sponsor of mine. I'm biased in their favor because, of course, they're a sponsor. They pay me money. I'm biased. I can't guarantee anything. You want to check everything with them. But when you check out using my link here, use my promo code BT, Beginner Trading. It's very simple. Always remember, if you're checking out, use my promo code BT, stands for Beginner Trading. Here's the link. Help your boy out. We appreciate it. Yeah, I don't know. I'm a little bit... I like Brightlings. Brightlings look cool. Like, I like the way Brightlings look. And so, my next watch purchase will probably be a Breitling. But I don't ever wear my expensive watches. They're kind of like a trade, you know? Like, most of the time I'll wear, like, a Movado or something cheaper. Not cheap. Movados aren't really cheap, but they're cheaper, certainly, than some of my other ones. Yeah, New York City Bank. So, reset means, like, if you try the challenge and you lose, unknown, then you could start all over again for only $35, right? So when you first buy the $300,000 one, which if you pass it, you get $300,000 in funding. You know, with the 90% split, you get to keep your first 25 grand in profit as well. But if you fail the challenge, if you lose too much, like if you hit the max loss, you can reset it for only $35. So it's very cheap to reset is what I mean by that. Yeah, we're talking about Apex. Yeah, what about NYCB? The big story of the last few days is New York City Bank's craziness. They bounced all the way back up from this parabolic drop they had. Here's New York City Bank. They came all the way back up. I didn't even see this, man. Wow. New York City Bank all the way back up to 360s. Nvidia back over 900s. Well, I think this was probably a bailout. Yeah, this was a bailout, Jonathan. Or this was a bailout, whoever said that. All right, guys, we got 17 minutes before jobless claims unemployment filings come out. 17 minutes. I'm ready. I'm not sure, Daniel. I know you can use Quant Tower. I use Quant Tower on there. That's the one I've been using is Quant Tower. Yeah, you can use R Trader Pro, Quant Tower, a bunch of other ones. You can request up to 2 withdrawals a month, Daniel. Powell speaking at 10 a.m. 10 a.m. And like I said, just remember my promo code BT. You can also use triple B. BBB. Palantir bouncing again here, guys. See, I think the engulfing candles are way too... I gotta make them more strict. Yeah. So again, I gotta fix this and mess with the engulfing candles one. Let me see. Let's get rid of that. There we go. Look at how much better this is. Wow. Look at how much better this is. Wow. Look at how good this is. That's it. That's the one right here. So much better. So much better. Alright, so we got these. We got hammer candles, engulfing candles showing up. So much better. Alright, let's try this. Hey, what's up, Kimberly? EU rate just declared. I'm assuming they did a pause, right? They're still pausing rate hikes is what my guess is. Yeah, so ECB rate decision. Look at this bounce up. So the ECB must have paused rate hikes again. Let me make sure. Yeah, so they maintained the at 4.75. That's what they expected. So they left rates unchanged. Interest rates are levels that maintained for sufficiently long will make a substantial contribution. All right, let's keep messing with this. Yeah, so it's probably why the SPY bouncing up. You can see the NASDAQ here. Yeah, so again, ECB reported a pause in rate hikes, which is what we kind of expected. All right, sorry guys. Look at Palantir rip up. Nvidia bouncing almost up to 905s right now. Almost up to 905s. All right, guys. We got 8.5 minutes until jobless claims numbers come out. Do y'all not like my music right now? You want me to change it? I mean, that's all you gotta say. Chat, do you guys like or dislike the music I'm listening to right now? I can change it. It's just lo-fi hip-hop. That's all my music ever is. It's just a playlist built around it. All right, guys. Jobless claims drops in a couple minutes. Alright. This is more like house or techno. Yeah. Yeah, I mean, it could be somebody just creating a different account and saying the same thing. Change it? Alright, we got enough people complaining though, so I'll go ahead and change it. Again, this is just an old playlist. It's just going through old instances of it. Alright guys, hey, we got 8 minutes. 8 minutes, the timer's a little bit early. Sorry, I'm trying to build a script here. Alright guys, we got a couple minutes left. All right, so I'm almost done. I'm building an indicator called a power move indicator that identifies powerful candlestick transitions in charts, and it looks like it's working really well. I'm building it through ThinkScript, which is Toss's trading language, developer programming language. Let me see if this one works. When Powell's at 10 o'clock. Rivian flying. Is Rivian finally moving up? We got Palantir moving here. We got a hammer candle showing up on chart. Maybe this is a bearish sign on the Q. Nvidia still bouncing up. We got over 1,000 people here. We got jobless claims numbers dropping pretty soon. Tesla should run. Is Rivian running? Let's take a look. So here's Rivian. Rivian up to 1104. Nvidia still bouncing up here. Where's Meta? Meta's bouncing at 205s. Oh, dude. Again, GPT-4 genuinely solid. Is there news today? Yeah, we got a lot of news. We got jobless claims numbers dropping in about 3.5 minutes. We have, here, I'm going to short the Q and test. Actually, no, I'm not. We got jobless claims numbers dropping soon. I would short it right now based off of a simple indicator, but again, we're just not going to. We're not going to get it today. We got to wait. We got to wait until after this report goes. All right, guys, we got 2 minutes left. 2 minutes left. Yeah, jobless claims numbers coming out too soon, so I just got to be very careful in that regard of not, like, betting. Again, 217 is what's expected here. No, something messed up on this one. I'm gonna have to go back to the previous example. We gotta find it. Let's try this one. All right, guys, here's the report in less than a minute. Less than a minute. Okay. There we go. All right, chat. Again, we got less than 2 minutes here. Less than 2 minutes. 217,000 is what's expected here for jobless claims. 217,000. Again, these could have a big influence over markets. They might not as well. We're gonna have to wait and see. Meta at 499. I'm gonna put the SPY up. I'm gonna put maybe gold up. Or no, we're gonna put the Q in gold and Nvidia up here. to see what happens. But 217 is what's expected for jobless claims, chat. 217. Here we go. Get ready. This timer's a little bit early, so it's all right. Here we go. Hit the live button next to the play button. We got 20 seconds, chat. 20 seconds. I'm going to throw this bad boy in sub-only mode, though, so y'all hit that subscribe button. Do it now. You know you want to. Here we go. 10 seconds. Hit the live button, guys. Make sure you're called up. Hit the live button. And there we go. Jobless claims showed up at 217, exactly what was expected, completely flat. 217 versus 217 expected. And so again, they came in as expected at 217. Exactly what was expected. Initial claims came in, or continuing claims came in slightly higher than expected. So that might be seen as slightly bullish. Although initial claims came in completely flat at 217 versus 217 expected. Again, maybe they're going to interpret this as slightly bullish, but again, jobless claims numbers showed up flat. Market's liking it though, moving up. Here's the jobless claims report right here. Again, continuing claims came in slightly higher, slightly higher. Slightly higher than expected jobless claims. Again, we'll see if it continues. I want to see if this is what breaks the code. All right, guys, market so far ripped up initially and then pulled back. Gold moving up, yeah, so taking a look at this. Taking a look at this. Yeah, let's get out of here. Gold testing highs, so is the Q. 217. Again, as expected here, chat, as expected. All right, chat. Again, gold pulling back to 2160s. Nvidia's still testing highs up here, chat. So Nvidia's still trying to move up. All right, so jobless claims causing a positive effect on the NASDAQ. Nvidia just broke highs of the day. It's up to almost 905s right now, almost 905s. So here we go. And again, we are getting, some people had it at 215. I showed it at 217, so I showed it as flat. Some people had jobless claims numbers at 215 though. And so again, what this might indicate is less spending, which is better for inflation problems, right? If there's less spending, there's ultimately less inflation problems. And I think that's the lens the market is looking at it under as well. I think that's the lens the market is looking at it under as well. Forgive me, guys. I'm just kind of programming stuff right now. Okay. Apple or Tesla would affect the market or no? I mean, it has positively affected the market some, but we don't know in what way, how much. All right, so we got a hammer candle showing up on the queue. Nvidia breaking highs again, up to 905.20s here, chat. 905.20s. Remember, guys, if you want to check out Apex, Apex has a crazy good sale right now. It's 71% off all packages. If you use promo code BT, beginner trading BT, or triple B, BBB. But the big sale right now is for resets. The benefit of this is that all resets universally on Apex are $35, meaning you can buy the $300,000 challenge right now on Apex and reset it for $35. If you've ever wanted to get funded in a big account, now's the time to do it. Apex is a sponsor of mine. I'm biased because they pay me money, of course. But, again, they give you a demo. They test your skill. If you could pass the test, they fund you. If you fail the test, you only lose what you pay for the challenge. And, again, if you lose trying to get funded, if you hit the max loss, you got to hit the profit target without hitting the max loss. And once you follow their rules and do those things, in futures, they fund you again. But if you get eliminated out of the $300,000 challenge, which is about $200, you can reset it for $35. So essentially, you can keep resetting the most expensive challenge for only $35 right now. Crazy good deal. Again, remember, use promo code BT, beginner trading BT promo code. If you want to help support your boy here on this channel, we appreciate it. Thanks so much. Again, we'll put the link up here. You can also find the link up in chat if you want to help support your favorite trading channel here. Alright, so we're still trying to mess with this code. Let me take a picture. I wonder if it's going to understand a picture. Let's see if... Tesla needs to follow the uptrend. Again, Nvidia's up there. Gold dipping down a little bit here. Chat, gold dipping down some. Daylight savings time ending this week? Yeah, it does end. It is spring forward, so we lose an hour, correct? I think we lose an hour now. No? Right? We lose an hour, I think. No? All right, let's run up those likes. Hey, thanks so much. We lose an hour, but not the money. Gonna eat something. I'll be back in 30 minutes. Yeah, I mean, I'm sure they're like, again, the problem, you see a lot of people selling picks and like they sell picks, they sell call outs or whatever in Forex. You see a lot of people selling them on like Fiverr, right? And the problem with this type of stuff is like they have a direct interest in needing you to come back to them. So they want you to come back, right? And so how do they get you to come back? How do they get you to win a bunch so you can come back to them? They give you a crazy big risk and a small profit level. Right? So if your risk level is $1 and your take profit level is 10 cents, you're going to make money most of the time. And so if you get an unseasoned trader coming to you, they're going to be like, man, this dude's been right 3 times in a row. Let's keep paying for his service, completely oblivious to the fact that your reward is tiny and your risk is massive. And while you might win most of the time with that type of call out or pick from these scammers, eventually the check's going to come and eventually you're going to hit that max loss and you're going to lose everything. And so, again, you got to be very weary of that type of stuff because they are very aware. All right, so... All right, chat. Super micro semiconductors. Let's take a look. So the last hammer candle we got was way back here. I'm pretty strict with the hammer candles though on this code that I'm building. So yeah, not yet. So not yet so far. Palantir. I'm in Palantir right now. Sun is healthy for you, bro. You need that vitamin D in your life. If you don't have it, you're gonna be unhappy. You know, I can't get freaking... I can't get the correct power moves to show. I gotta take this code from it and ask it to fix this. Let's see, power move. we're gonna mess with this later. I'll build this later, guys. We're working on building something here, and it's doing okay. But there's a lot more I gotta mess with, and it's causing me to just focus not enough. So again, look at the engulfing candle indicator, man. I'm still genuinely impressed by this. Like, look at this engulfing candle right here. Follow through bounce. You could look at it on longer terms as well, but we're gonna use it specifically with our scalping. But genuinely impressive here. Genuinely impressive. Again, now we got Jerome Powell, Big Papa Jerome Powell speaking later on today too. Rivian and Lucid. Jobs data came in flat. So jobs get data. Yeah, that's what I'm doing, Blaze. That's what I'm building. I'm working on that's what a power. I'm working on building an indicator called Power Move, which inputs a lot of different candlestick data and gives you a good identifier of like bullish patterns. Now this one was right before jobs data, and so on a 5-minute chart, we can't really be too strict with the power move there. But I'm looking back at the history and like check it out. So like look at the bullish power move, and then you get a follow through bounce. I'm trying to see how well it'll work on other ones. I'm kind of in the testing period for the algorithm now. I think so far it's maybe over predicting power moves, bearish power moves specifically. And I think what's better than the power move indicator so far, let me mute it. Can I mute this? Yeah. So I'm taking the power move off, but look at the hammer candle signals. I think these are the impressive ones right now. Like, look. So the hammer candles on a 5-minute chart. Like, look. Hammer candles, boom. So it starts to tell you when the candlesticks are starting to trend more towards the other way. We have hammer and engulfing candles on here. So it's still a process. But hammer candles tend to do a really good job predicting tops. And so we're looking at, I think a 1-minute chart was a little bit better. On a much shorter term perspective, yeah, we did get 2 hammer candles. I think these are going to work a lot better. Engulfing candles are kind of the most powerful one too. So like, if you just look at the engulfing candles, you'll see how useful simple engulfing candles are. They're not going to be perfect, right? But like, look, like, let me give you an example of this. Okay, we already got it. So yeah, let me give you an example of this. All right, so like, look. So if we take the hammer off, and you just look at engulfing, right? Like, look, here's a 1-minute chart. Look at this. You just take the hammer candles off. You just look at engulfing. Look at this. Engulfing candle here, breakdown. Engulfing candle here, bounce. Engulfing candle here, bounce. Cheat code for the market. You're welcome, chat. You're welcome. I know we got a bunch of people over there like, what? Type it up right now. You're welcome. Powerful. Genuinely powerful. You just got to be patient with them. But now I have them on my toss screen, and so that'll be helpful. Look at this. Genuinely impressive. Look, engulfing dip, engulfing dip, engulfing bounce, engulfing bounce, engulfing bounce. This one was wrong. I'm gonna leave this on the screen. Yeah, well, that ain't me, different person. Good day to you, troll. Have a great day, Solar. Come on now. Hess is reviewing the expected timeline for legal closing. Yeah, like, again, it's almost certainly a fake person. Like, that's almost certainly a troll, like an alt account. Again, you got to understand, a lot of these guys are people who have been banned prior. Some of them are probably people who like, work, some of them are probably people who've tried to work with me before, or people who just, for whatever reason, are really emotional or insecure, and so they just kind of obsess over my channel, stick around, stalk us, like, do whatever they got to do. Again, I feel bad for them, because again, if you're mad at somebody that's literally called beginner trading, that tells you not to copy him, that tells you he has no idea what he's talking about, that doesn't even give predictions. Like, people ask me constantly, it's probably the most asked question, hey John, what will X do if X happens? My answer is always the same, I have no idea. Right, I'm the only person that I know of on YouTube that tells you he's biased in the sponsor's favor, tells you he's biased, tells you he doesn't know what's going to happen, tells you he's not an expert, tells you not to copy him. Yet people, for whatever reason, they feel threatened by that. You're welcome, guys. Top 3 most righteous traders in the world right now. And be mad, it's okay. You know? ECB President Lagarde says the Eurozone economy remains weak and highlights the slowdown in external demand. Like, how are you going to get mad at me? Really, genuine question. Like, dude, this is literally my disclaimer. That's literally my disclaimer. Remember, I'm terrible and have no idea what I'm talking about. Good luck. Like... So if you copy me and lose money, it's your own fault here, okay? I told you guys enough, you know? Hey, thank you, RS, my guy. Thanks so much, dude. He said, John, you are one of the most solid people that live trades. You are honest up front. Hey, I appreciate it. The problem is that you're going against the wave, 100%. I'm threatening a lot of gurus' business models is what I'm doing, and they don't like that, 100%. That's exactly what it is. And it's all good. Like I said, if I was out here slanging courses on publicly available content, I might get mad too at me. It's all right. You know, when you look this good and you're on YouTube and, you know, you got this beautiful library and, you know, I mean, people are going to hate. It's life. Life's a blessing. You know, cheers to you guys. I appreciate the love. Top 3 most Forrest Griffin looking traders in the world right now. Powell speech is at 10 a.m. Yeah, guys, all I'm saying here, okay, all I'm saying. Yeah, all I'm saying is I've been selling my soul working all day, overtime hours for BS pay, so I can sit here and waste my life away. Completely unique here is what I'm saying, okay? Just completely unique. Drag back home and drown my troubles away. It's a damn shame what the world's coming to, you know? For people like John and for people like you, all right? Wish I could wake up and it not be true, but it is, all right? But it is. Now, this is one of the top 3 best indicators in the world right now, in my opinion. I might be wildly wrong, and don't copy me. I have no idea what I'm talking about. Don't sue me either. But yeah. Palantir big AIP conference. Yeah, they smell like mahogany in here. All right, like my channel smells like mahogany. All right. You come in here, it just smells like success in my office right now. You know, like look at this office here. Like look at these books. It's like the secret garden in here. Okay, don't judge, don't hate. Mahogany and sandalwood, eh? Yeah, Nvidia's starting to move up. We'll see. People saying we're losing views by the minute. We just got a boost of 200 viewers in about 3 seconds. Again, we got Jerome Powell speaking later on today, bro. You think we don't have views now, bro? Come back here at 10 a.m. You know? Watch how many people we got here, sir. You love to see it. All right, so again, jobless claims numbers are out already. Is this music better than before? People were so upset about the music. All right, so jobless claims numbers are out. All right, so Powell is going to be speaking in front of the Senate today. It's Powell in front of the Senate. Yeah, so Powell's going to be speaking in front of the Senate today. And again, we got a couple minutes. We're going to use this new indicator right here on the queue too, for sure. Yeah, right now he's going to be in front of the Senate. So it's a congressional testimony, right? So right now it's going to be in front of this, or at 10 a.m. it's going to be in front of the Senate. Yesterday was in front of the House. New York City Bank CEO says regarding a potential loan portfolio sale that people are interested in purchasing assets, particularly outside the banking industry. So Lagarde says the Eurozone economy remains weak. We're putting this number up in chat. We got this news dropping. Titanic John. Is that my nickname now? Titanic John? I like it, bro. How about John the Titan? Maybe that's better. Maybe Titan's not the good word after the sub disaster we had this year. Rivian is launching a new affordable model today. I think that's necessary. Rivian has pretty big backing, right? So Rivian actually has very large backing. Definitely top 3, Rob. How about Abercrombie and Fitch? You'll never see sub 2,000 gold again. Again, gold up here. Yeah, this is Mahogany John. I'm just gonna make that my new nickname. You know, this is really AI John, but I'm gonna nickname him Mahogany John. Okay. That's him. Titanic John too. This could be Titanic John, right? Should it be I guess I do look like Jack in Titanic. I mean, I don't look like him, but the setup looks like him. Looks like I'm about to walk out. You know. Mahogany John? No? That's not it? John Dawson. Hey. The GOAT. Congress put a lot of pressure to Powell since last year. Yeah, I mean, you know how it goes. It's politics. Which John is better? We got old John flipping the bird, or we got Mahogany John on the left? Alright guys, we're getting ready to actually start trading here. I'm just kind of playing around. I've been playing around for too long. We're going to get ready to start trading. Wait, where'd my mouse go? The problem with having all these monitors is you lose your mouse. Paul Felder, if he never made it to the UFC. Hey. I come here for no financial advice for all, or at all. Yeah, well, you're not going to get it here, brother. Gold dipping under the 200 EMA. We got Nvidia down under the volume weighted average price, under 900 as well. You know, I created an indicator earlier that combined the 200 EMA and the volume weighted average price. So we'll see if it continues. Alright, let's see if we bounce here on the gold's chart. Let's put the SPY up as well. Where's Tesla at? How's Tesla doing this morning? Tesla bouncing back a little bit. Apple finally bouncing back up to almost 170s. Nvidia breaking down. Supermicro Semiconductors is all the way at 1130s. 1130s. Oh, so we're very green on the day, man. I didn't even realize how green we are. That's nice. We needed it after yesterday. Still green in Coca-Cola. NASDAQ going down. I suggest buying the new Tesla innovation shares at this point as they are relatively cheap and are sure to yield dividends soon. What's the ETF symbol, Christine? Do you recommend any good books to read? What kind of books? Trading books or just books in general? Claudine says, I like the playlist. What's the name? The name's John's playlist. Yeah, I mean, we'll see what Tesla does. Again, Tesla full self-driving is the interesting part to look at. So full self-driving, I think if Tesla accomplishes that with full regulation, then they're going to be on the forefront of that big rush of tech. I don't know when it's going to be, though. It might be in 2 years. It might be in 20. We don't really know. Sometimes stuff like that takes a while. I would say don't read a trading book. You know, you get a lot of people that are like, ooh, trading books. But I don't think trading is something you want to learn in book form. I think technology's evolved past that. Obviously, I read some books, right? But don't learn trading from a book. It's not going to work. You know, maybe investing from a book, learning how to read PE ratios, market cap, all that stuff. You can learn that from a book. But learning actual trading is mostly done through experience and just kind of testing different things. That's how you're going to learn most trading. It's not going to be in book form, most likely. I mean, there's some good books like Mark Douglas's Trading in the Zone. Rest in peace to Mark. But he had some good books there. But everything since then is just basically... Like, there's some good books interviewing traders and stuff. But when it comes to actually learning about trading, that's a different thing. Also, guys, y'all join my Discord. If you haven't joined my Discord, check it out. Here's my Discord. I think, let me post the Discord link here. Yeah, here's my Discord link. Join it. Completely free. Doesn't cost anything. Still watching Apple, Tesla, The Spy. We're going to get ready to day trade as well here, chat. Palin's here at 27s. Yeah, definitely top 3. Yeah, look at this engulfing candlestick indicator service, though. We're going to see if we get some good pullbacks and bounces. Super micro up there. Nvidia still trying to bounce. Let me put this on all my charts. Like, even on Nvidia chart, like, look at this. Some of them, it's not perfect. Engulfing, dip, bounce, bounce. This one was wrong. This one worked. That one worked. That one worked. So even on Nvidia chart, engulfing candles are still powerful. I'll put it on all the charts right now. Like, even on super micro, it's hard to knock this, right? Like, it really is hard to knock this. Look, oh, this one was wrong, this one was wrong, that one was right, that one was right. I guess the time frame matters a lot, too. Yeah, look at a 5-minute one. The 5-minute one is genuinely impressive. Like, look at this. Engulfing, bounce, engulfing, dip, engulfing, bounce, engulfing, bounce. 4 for 4 on the 5-minute chart. Let's take a look at Nvidia. Yeah, engulfing, dip. This one didn't really work. That one worked. Engulfing, breakdown. Try Palantir. Palantir still bouncing. Spy still trying here. Nvidia does a split. If it can hold the gains, I think a split is inevitable. If it can hold the gains. All right, guys. So Apple bouncing a little bit back up in pre-market today. Are you guys red or green so far today? We're going to get ready to trade here, too, at the open. Let's get ready. I'm going to keep these as big as I can so I can use these to influence my trades. All right, so I'm getting Quant Tower up. Chat, we're going to get Rhythmic out. Start trading on Apex. Watching some other stuff, too. I mean, again, Powell has the ability to help or hurt the market right now. All right, so we're in Rhythmic. Let's get started. All right, so we need that one. Okay. And put the micro. Okay. So we're out of that one. Rhythmic. All right, this one we should have fun with. All right. All right, you guys ready? Again, before we get started, remember, do not copy me. I have no idea what I'm talking about. Remember, I am terrible at this stuff and I have no idea what I'm talking about. Might be wildly wrong about anything and everything I say. Not an investment professional. I'm not liable if you lose. Anything you see on the charts is not meant to be a signal in any way whatsoever. Do not copy me. I have no idea what I'm talking about. All right, guys, I'm gonna put this up. Nvidia got an engulfing candle. That might mean we get a little bounce play here. There we go. We got at least a little bit of one. We're also right at the 200 EMA. Took half off there, locked it in. We got a little bit of room now. All right, so we're up $60. Shout out to that engulfing candle. Well, no, I mean, I've been trading for freaking 7 years. Like, I've been watching markets and trading and looking at economics for years and years and years, every day. I'm just saying I'm not liable if you lose. It's a running joke of the channel, you know. Yeah, I'm not sure, Danny, what you should invest in, bro. Make sure my trade evade. Like, the Q just got an engulfing candle. I don't know what that means, but we'll try it. Oh my goodness, I'll look the other way for a second and the market breaks highs. Oops. Well, bad loss there. Honestly, I'm multitasking right now. Luckily, we're still all right. But man, market just flew up. Big Mo, it has to do with your latency. All right, ECB President Lagarde says ECB decisions are independent of other banks. They say policy is in the holding season, will then move to the restrictiveness season, and then to normalization. Well, but kind of shows you the SPY's engulfing candle worked. Same thing with Nvidia. The Q's engulfing candle on the red side didn't work. Yeah, I got, it's my fault. I looked the other way. Let me check you to see if you're toxic. I think you might be toxic. Let me check to be sure. John the trade. Yeah. All right, guys, we got 9 minutes. What up, Gabe? What's up, Tobias? If you have to check, they probably are, yeah. 8 minutes until the opening bell, chat. We're waiting for the opening bell here. Does whistling help or hurt the market, guys? What do you think? Hurts it? Okay, I'll stop. My bad. Palin's here pretty flat. The market had a big bounce, though. Are you still reading crypto, John? I was long Bitcoin since 20K and just closed my trade at 68 and went short and closed at 60. Then went long again and closed at 67. Hey, nice trades, P. Nice work, bro. Helps it? Doesn't help it? Top 3 whistlers in the world right now. Again, it goes Pee Wee Herman, Jon Snow from Game of Thrones, and then John Beginner Trading. If that's not your top 3 whistlers lists, you're missing out on life, man. I don't know what you're doing over there, but I'm definitely top 3 whistlers. All right, so we got this big rip up. It's too up there for me to want to buy it. I'm just watching. Yeah, the rest of my family struggles to whistle as well. So I'm definitely top 3 in my household of whistlers. But my daughter can't whistle, my wife can't whistle, you know. And so what I typically do is I walk around the house whistling just to kind of flex on them, you know, and make them feel bad because they can't. Because, I mean, if you're not flexing on your family for not being able to whistle, what are you doing with your life, you know? SPY pulling back, it's at 513s. CRWD. Yeah, CrowdStrike had earnings a couple days ago. They ended up giving back at least half the gains from earnings, though. They were at like 290 before earnings, went all the way up to 380. Huge percentage move, like 30% up. And then they came all the way back down to 330s, which right around where they're sitting now. I do think it's at kind of a major support level, but who knows? Yeah. All right, so we got this big dip. I'm gonna buy this. See if I can redeem my terrible loss earlier. Again, this is the 300K combine. Around the opening bell, I'm probably gonna trade micro contracts on Tradeovate. But I'm waiting. I gotta wait for my account to actually get funded on Quant Tower. I have one that should be funded by tomorrow on Quant Tower, but I have to wait for it. All right. What? It just like hurt my average all of a sudden. I don't know why. We're probably pretty flat here on this account. Let me see. Yeah, we're flat. That's cool. Again, this is a 300K combine, so I really got to take larger size than this. I'm just going to call it combine because it's a challenge. All right, well, we're green now on the day. We got 2 contracts left. We'll see what happens. All right, locking in some more. We're up about 200 or so on the day. Not very much, all things considered, but it's all right. We're trading right before the open. All right. I don't know enough about Palo Alto to really say yes or no. Hey. We got Carol here.
Hi. Morning.
Yeah, I'm telling Carol about how I told you guys she was emo. She definitely was. Carol had like straight black hair, and she had like the emo one blonde stripe going down it. She did. She did. You know, listening to My Chemical Romance, Black Parade, you know. She was into it. I can get down with it.
I was into it before the Black Parade.
Okay.
Yeah.
She was cool before the trends, you
I
know.
feel like I was more like alternative, I would say now. I don't want to say that I was emo.
Maybe. I don't
just
know.
wanna say
Emo's good
alternative.
music. Like The Used, good. You know, The Used is really good. Brand New, really good. You know. So there's some good music. All right, the market's about to open. All right, baby.
Yes, good luck.
All right, love you.
All right, love you. I'll
Bye.
talk to you. I'll call you.
All right, love you, bro. All right, guys. Hey, we got less than a minute here until the market opens. Less than a minute. All right, 40 seconds. NASDAQ broke highs again. Should have stayed in that long, but that's all right. All right, we got 25 seconds left. 25 seconds. SPY just broke highs right at the opening bell. All right, chat. We'll see what we get. All right, so there's the opening bell. Ding, ding, ding. There's the opening bell. We got Palantir breaking lows real quick. I see some strength in everything. Google bouncing up a little bit. Apple completely flat on the day. Nvidia cracking lows under 900 at the opening bell here. All right, so we see some strength, but we got a lot of up wicks and down wicks, a lot of indecision right now, I think. All right, so kind of flat. We got Nvidia kind of bottoming out with some up wicks or down wicks, I mean. So we're just kind of sitting here waiting. I'll play with this. We'll take a position here. We're already up a couple hundred on the day. I'm gonna add to it too up here. Boom. All right, so we're up about 5 on the day now. This is my P&L. You can watch me slowly grind it up. Big downwick showing up in charting here. I'm gonna go ahead and buy this, I guess, but we're gonna have to scale into a position here as we potentially dip. 6 contracts. Consolidation heavy here right now, chat. We're kind of flat. All right, we took a little bit more off. I'm gonna probably add to this, see if we get another rip back up. Yep, there we go. Cut it. Keep adding to it. Cut it. All right, so yeah, we're up about 840 right now. Now again, this is a 300K combine or challenge account, so we're still working on getting funded in this one, but we're funded in almost 3 other ones. We gotta wait until they fund us at the end of the day today for another one. Nvidia ripping up. That should be optimistic here. Over the 200 EMA. Let's buy this, and then we'll try to scale in on a big dip. Pull back, see if we get a retracement bounce back up here. And giving it all back, I guess. Let's see. You know, with these combine accounts, you got to take some risk. And so that's what we're doing here. We'll switch to our actual funded account in a second. Once the volatility open plays out. I'm going to go ahead and go with this. I could reset this thing for 35 bucks right now, which is the benefit here, which I guess I'm going to try to do. But with that said, I got to go kind of like really hard in here. Full size. There we go. Give it to me. Boom. All right. Whew. We used the risk we had to make about 4K. I think the way to get funded is this, right? You build up a cushion, take larger risks once you have that cushion, and then once you take those larger risks, then you can do whatever you want to do. SPY still testing highs up here. Q rip it up. Look at the Q up to 443s. All right, so we're about 25% of the way there. Nvidia is what's dragging everything else up here. Look at the market fly. This is good news for me. I want to see this. We're green on the day, finally. Snapchat doing really well today. I'll probably take a little bit of profit on Snap right now. Took a little bit off on Snap. Red to green move at the opening bell this morning. We're waiting for some engulfing candles to show up, honestly. These huge candle wicks, like, look how big this move is. Hey, later, Justin. Have a good day, bro. I mean, you could build a cushion. Snap, rip it up. Spy, rip it up. Palantir AI stocks, rip it up. Google. Yeah, we've had 1, 2, 3, 4, 5 red candles in a row for NVIDIA, breaking lifetime highs. I think we just broke lifetime highs. So NVIDIA just broke lifetime highs up to almost 910, 908, 80s, 909s now. That was the previous lifetime high, 909.10s. So NVIDIA just broke lifetime highs again. Again, we're up too much for me personally. I need to wait for a pullback here before we take anything. Again, we've had 1, 2, 3, 4, 5 red or green candles in a row. It's too high for me right now. I don't want to mess with this. It's just too extended. We need a dip first. Where do we dip to? All right, here's the dip. Is this one of the dippiest dips I've ever seen right now? We're going to start dipping into this. We got a large cushion on the day, so we're going to take like 5 contracts here maybe. See if we can catch it. There we go. Take some profit into that cushion. There we go. Maybe add some more to it on a pullback again. Yeah. Take a little bit more off here on the bounce again, which is the plan. Take a little bit more off. Cut the rest, break even, but try to let it ride. We'll add a little bit more play. I don't like this. We're gonna cut this about flat. So yeah, we just made a, $500 or so. I told you guys it was one of the dippiest dips I've ever seen, and it worked. Again, Snapchat, rip it up. We dip bought Snapchat. Our average price is 11. It's at almost 12, so we're up a good percentage there. Whatever that is, like 8% or whatever. Tesla bouncing back nice today. Apple's starting to turn though. And so we're still waiting for some engulfing patterns to show up on the charts. I gotta put up like, I'm gonna put these up on Q. I wanna put a 5-minute chart of the Q up and then put the engulfing trends. We're in 6 contracts. Just getting punished here. This lost a little bit. Here's our P&L on the day. Big turnaround from green action at the opening bell. You got to watch NVIDIA here. Apple is kind of influencing the market is what this is. Apple kind of breaking down under the previous closing price, technically green on the day. The market might, or technically red on the day. The market also could just be waiting for Powell to speak. And so that's certainly possible too. Somebody's asking me if I'm just buying randomly on dips. No, I bought into what would, like, look at all the, like, the resistance here, and which I would assume could turn into support is what I was doing. That's what I just bought into. It's not random. I'm also looking at, like, Nvidia pulling back to the VWAP here, bouncing. It just bounced a little bit after where I thought it would. Now it kind of looks like a cup and handle, but again, I'm going to slow down and wait. AMC. Today is going to be in front of the Senate instead of the House. AMC is ripping up. It's almost up to $5. Yeah, it's all good, bro. Again, I'm not even claiming to be a good trader. You know, you guys know how I do it. I'm not even claiming to be good. Again, this kind of looks like a cup and handle pattern. I guess I'll play with it in that way. Oh, that worked. Again, remember, we're trading on Apex's funded account program, in which they give you... Ooh, SPY had a engulfing candle. All right, look, we're going to risk this account right now. Because the SPY has an engulfing candle, and so we're going to take a big risk, and if we lose, it's okay. We're going to take a big risk, and if we lose, it's all right. Again, after this, we're going to pivot to our actual funded account. I might be taking a little bit too large of SPYs versus what I want, though, but it's all right. Like, I think I probably should give it a little bit more room to play out, maybe, but it's all right. We'll keep trying it. After this, we'll pivot to our actual funded account. Look, since we're flat here, I'm going to start taking profit very quickly. Because I want to give it a lot of room for the engulfing candle to play out, which it is. Alright, so we got 15 contracts. I think that should be enough with the profit we have to be justifiable. So there we're up 2. We'll take a little bit more off. We'll make it 10 contracts here. A little bit more. Maybe add some too. Hey, that engulfing candle worked out beautifully here. The SPY engulfing candle was on a 5-minute chart too, so it's a longer term trade. Locking in more profit. Locking in a little bit more. It worked beautifully, man. Beautifully. A 5-minute engulfing candle is what this was. More. All right, we're gonna cut it right there. So yeah, we're up basically 50% of the way there in our 300K. And again, these are powerful right now too, because you can reset it for $35 on Apex right now. It's 71% off, but all resets universally, even the 300K one, which usually costs a couple $100. To reset, it's only $35. So you got to pay for it once for 200, but then if you lose it, you can reset it as much as you want for $35 right now. And I think that's a crazy big edge. If you've ever wanted to get funded in one of the large accounts, it's pretty cheap to try. And again, if you want to check out Apex, they're a sponsor of mine. You guys know me. I'm biased, of course, because they pay me money. Biased. Top 3 most biased traders in the world right now. But if you want to check them out, again, I can't guarantee any of this stuff. You want to confirm it with them, there's the link. Somehow we're still green from equities. Yeah, I mean, Zachary, you know, the Dunning-Kruger effect is very true in trading terms. It's very true. What I mean by the Dunning-Kruger effect is typically the newest people in trading tend to think they know the most. They tend to think that they know the most, and they make the most definitive statements. Like, if you don't do this now, this is going to happen, right? Generally, people that are truly experienced in markets understand that nothing's definitive. We don't know for sure anything. And so the people that go around from stream to stream telling the streamer, sell now, do it now, or don't sell now, do it now, are typically the newest traders, right? The newest traders. I'm not attacking anybody. This is just pretty true. The experienced ones are the ones that are going to admit that they don't know what's going to happen and that we're all just kind of betting on favorable probabilities or not. You know what I mean? If you want to know what symbol I just took that trade based on, look, here's the SPY. All right, put a 5-minute chart up. Look at this. Here's the engulfing signal that I got from this. Again, I can't guarantee this is going to work. Do not copy me. But a 5-minute engulfing candle on one of my other charts signaled this. As soon as I saw that engulfing candle, I jumped in. Is the reason I took that trade. All right, we got Big Papa Powell speaking in about 11 minutes here, guys. 11 minutes for Powell. All right, you guys ready? AMC breaking highs again. Market's kind of flat right now. Hey, my guy Jay. I don't know. How long before payout? I'm not sure. Today is congressional testimony with the Senate instead of the House. All right, NVIDIA up there at 908s here, chat. 908s. NVIDIA all the way back up. Very flat day leading into Powell here, so this might just be Powell flat. This is Quant Tower. Get ready. Powell speaks soon. He speaks in about 8 minutes here. I use Quant Tower, so Rhythmic is what I use. I use Rhythmic. This is Rhythmic on the right side with Quant Tower is the platform, but it's the Rhythmic system. Everything's moving all the way back up. Apple technically green on the day. Palantir green on the day. Market's bouncing right back up. Google's bouncing back up. Apple's bouncing back up. Tesla's bouncing back up. Snapchat's still moving up. Never really stopped. Oracle moving all the way back up too. You guys ready? Here we go. Oh, wait, he might be live right now. Let me make sure. Yeah, he might be live right now. Hold on.
The nomination of Ron Borzakowski to the Director of the Office of Financial Research, Department of Treasury. The clerk will call the roll. Nomination of Ron Borzakowski be Director. Clerk will call the roll.
Mr. Chairman.
Aye.
Mr. Reed.
Aye.
Mr. Menendez. Mr.
All right,
Kester,
so they're getting started now here, chat.
Mr. Warner. Miss Warren. Mr. Van Hollen.
Sir Van Hollen. Name was called. Thank you.
Miss Cortez Masto.
Pretty good.
All
Miss
right, so
Smith.
we're in here. Sound check. Is the sound
Mr.
good? Let me
Warner.
get the music off.
Mr.
Yeah, sorry, I got the good music off. All right, so Powell's testimony is about to start. Right now, we're dealing with the Senate.
Chairman Powell, if you'd like to, after your opening statement, give it again, you can certainly do that. The Fed has immense power in shaping our economy. Your job is clear: promote stable prices and maximum employment. Today, the cost of living is still far too expensive for most Americans. The Fed has only one tool available to fight those high prices: interest rates. That tool does nothing to address the real costs, the real cause for why costs remain too high. Corporations price gouging to boost profits and make their shareholders richer. Higher interest rates don't force corporations to lower their prices, but high interest rates are raising housing costs, hindering wage growth, stifling small businesses. We all know that. Now's the time for the Fed to decide if it's going to make good on its commitments to workers and to their families by lowering interest rates, by protecting our financial system from Wall Street executives who have used their wealth and their power to influence economic policy and avoid accountability for their for their risky bets. Keeping rates too high for too long strangles the economy. No one wants this. It makes it harder for small businesses to expand and hire more workers, undermining job creation. Higher rates also stifle overdue investments that are creating high quality, good paying jobs and that are necessary for us to remain the most competitive and innovative economy in the world. High interest rates are raising housing costs higher and higher for families already facing a tough market with too few options and too high prices. I hear from so many Ohioans who feel trapped. Those who rent feel like they'll never be able to afford to buy. Those who already own their homes feel like they'll never be able to afford a larger one if they decide to grow their family. If they're fortunate enough to have an interest rate from a couple of years ago, they obviously don't want to give it up. It limits their choices, it limits the housing supply, and by driving up construction costs, higher rates make it even harder to build new apartments and homes. So we have even less supply at exactly the same time when it's harder to afford a mortgage. Families are stuck delaying the purchase of their first home and renting for longer. That cycle drives rents up even further. Americans pay a steep price for higher interest rates. Continued high rates are not going to make life less expensive for workers and their families. We know why prices are high years after supply chains have improved. It's the same cause of so many of the problems in our economy. Corporations want bigger profits to reward their executives. Today we'll vote in 2022, at the peak of inflation, corporate profits soared to historic levels. That's not hyperbole. That's fact. Corporate profits soared to historic levels. As you know, where those profits went, right into the pockets of their top executives. That same year, the largest multinational corporations gave out nearly $1.5 trillion in stock buybacks and dividends. Americans today pay more for groceries than they have in 30 years. For corporate, every time you go to a grocery store, Ohioans pay for corporate executives' bonuses and stock buybacks. Every time you go to the grocery store, uh, grocery shoppers are paying for corporate executive bonuses and stock buybacks. The biggest corporations are always finding new ways to charge people more to increase their profits. Fast food restaurants, big stores are experimenting with electronic price tags so they can change prices constantly, making it easier to sneak prices up little by little, making it harder for people to comparison shop and find the store with the lowest price. Many companies increase their profits by charging more for less. The media started calling it shrinkflation. Senator Casey, our colleague from Pennsylvania, has particularly been a leader pointing this out. A bottle of Gatorade used to be 32 ounces. Now it's 28 ounces. But the price hasn't gone down. If anything, it's gone up a bit. It's why I introduced legislation that would stop that kind of deceptive corporate practice. It's the kind of solution we need to take on corporate price gouging. Has nothing to do, Mr. Chairman, as you know, with higher interest rates. The Fed doesn't only set monetary policy. You also make the rules that keep our banking system safe and sound and consumers' money safe. We've had some positive development, Mr. Chair, since the last time you testified in June, like the update to the Community Reinvestment Act. Thank you for your work on this. This took years of listening carefully to all stakeholders. It was long overdue. We'll be watching to make sure you implement this quickly so banks are fulfilling the purpose of the Community Reinvestment Act. I spoke to Ohio bankers yesterday, most of them small banks. They understand the importance of this. You also issued an updated capital requirements proposal called Basel III, the subject of much discussion in this committee. Strong capital requirements, how we ensure if Wall Street bets don't pay off, shareholders and investors are on the hook, not taxpayers. Too many examples in this committee, in this Congress, in this country of taxpayers holding the bag for corporate misfeasance and malfeasance and greed. We need these guardrails in place. I urge you to remain committed to protecting the public, despite the massive amount of money big banks and their lobbyists are spending to trying to kill these taxpayer protections. Let's finish the job. Let's finalize Basel III. Last year's bank failures also demonstrate the dangers of letting the banks chip away at rules and oversight. It's entirely predictable. Bankers desperate to increase their already massive profits take big risks that undermine our economy. When things go wrong, bank executives come to regulators with their hands out, accepting no responsibility. It's why Congress must finish the job and pass our bipartisan Recoup Act. Senator Scott and I worked on 21-2 in this committee to hold senior bank executives accountable when they gamble with customers' money. When the biggest banks exercise special privilege, they do so at the peril of our broader economy. We've seen that too many times. We know that's the source of so much that's wrong in this country. Big corporations using their power and influence to write the rules of our economy to the benefit of them and their executives and their investors, to the detriment of everyone else. It's why I stand up for workers and why I stand up for their right to organize. It's why I stand up to take on railroads and drug companies and the biggest banks and corporations who time and time again try to rewrite the rules to increase their profit margins. Chair Powell, I look forward to hearing from you today. Thank you, how the Fed will work to promote an economy where everyone who wants a good job has the opportunity to find one. Senator Scott.
Thank you. Chair Powell, thank you for coming this morning. Good morning. Appreciate you being here. Certainly 3 days, March 10th, it will be the 1-year anniversary of the failure of the Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and certainly the largest since the 2007-2008 financial. First, the bank was
Sorry, I wanted to fix this. You should be able to hear clearer now.
Second,
should be a little bit clearer.
There was a clear supervisory failure, and our regulators were certainly asleep at the wheel. And third, President Biden's reckless spending caused record high inflation, which resulted in drastic interest rate hikes and tremendous loss. When you print and spend trillions of dollars at the end of COVID, we should not be surprised that we have record high inflation. Record high inflation translates into today still 40% higher for gas for your car, 30% higher for your food, 20% higher for your energy costs. The devastation the average American is facing because of Bidenomics is undeniable, but certainly measurable. So I'm glad to spend some time talking about the state of our economy, an economy that has been ravaged, as I've just spoken about, by inflation, suffering under the weight of an open border and millions of illegal immigrants, and drowning in disastrous regulations. I hear from my constituents all the time that inflation and an unsustainable cost of living continue to impact their families. For far too many, the American dream seems further and further out of reach than ever before. And frankly, the past 3 years of this administration's failed policies have landed us right in that spot. In fact, last month, Treasury Secretary Yellen sat before this committee and attempted to spin a narrative of how strong the economy is, how well off consumers are, and how much people have in the bank, thanks to Bidenomics. But in the midst of this, she also admitted that many prices are not going down. In fact, she said, and I quote, "We don't have to get these prices down." Tell that to the mechanic working in South Carolina.
Trying to kill
Tell
these
that to
taxpayers.
the teacher trying to put gas in the tank. It is simply unacceptable. Because the truth is that Americans are now spending more of their income on food than they have in 30 years. The truth is that housing affordability remains at its lowest level in 40 years. But inflation isn't the only concern I'd like to raise. I'd also like to address the economic impacts of illegal immigration. During your recent interview on 60 Minutes, you stated that over time, the U.S. economy has benefited from immigration. Let's be clear. America is a nation of immigrants, no doubt. But when we talk about illegal immigration today, we must also face the dire reality that our towns and our cities are suffering from the adverse impacts of illegal immigration facilitated by the Biden administration's open, unsecure, and unsafe southern border. Because of President Biden's policies, we've seen over 7 million illegal immigrants cross our borders in just 3 years. By the time this election happens this year in November, the numbers suggest it could be as high as 10 million illegal immigrants coming into our country. So we cannot have an honest conversation about the benefits of legal immigration in our labor force without also addressing the elephant in the room. Our country is strained. Our economy is strained under the weight of illegal immigration. In fact, recent reporting has highlighted that cities and states across our country are struggling to keep pace, and some have been forced to cut public services to Americans in order to fund the cost of feeding and housing illegal immigrants. One clear example we saw in New York City were the poorest kids in the city, minority kids in the city, were stuck at home because the city was using the schools to house illegal immigrants. Another example, the city of Denver recently announced that some of its employees may have their hours cut in order to reallocate funds toward the city's migrant crisis. How in the world is that fair to Americans? It's not. We must get the illegal immigration crisis under control, because if we don't, our local economies will continue to be crushed and opportunities will continue to be stripped from our citizens and their families. Finally, as if inflation and the negative impacts of illegal immigration were not enough, the tsunami of regulatory red tape coming from our financial regulators further threaten economic opportunity across the board. For months, we've heard bipartisan criticism of the Fed's Basel III endgame proposal, which will restrict lending and access to credit for those who need it the most. I was certainly pleasantly surprised to hear your comments about Basel III and your thoughts on its future. when 97% of the comments that you receive are negative, that's good news. Good news for the American consumer. Good news for entrepreneurs who would like to start a business but do not have access to capital. Perhaps even good news for millennials who would love to become a first-time home buyer. The opposition to Basel III comes from diverse array of interests, from community leaders, farmers, to housing groups. We've even heard opposition in this very room, on this very committee, from Democratic senators. I look forward to hearing your testimony and looking forward to asking some questions as well.
Thank you, Senator Scott. We'll hear today, as we do every 6 months at least, from Chair of the Federal Reserve, Jerome Powell, on monetary policy, the state of our economy. Please proceed. Thank you for your service to our country.
Thank you, Chairman Brown, Ranking Member Scott, and other members of the committee. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report today. Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I'll review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of last year, payroll job gains have averaged 239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined, and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices, or PCE prices, rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Longer-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We have also continued to shrink our balance sheet at a brisk pace and in a predictable manner. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% inflation objective is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress that we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target rate until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Mr. Chairman. You've acknowledged the Fed likely waited too long to raise rates when prices shot up in 2021. We can't make that mistake again, Mr. Chair, at the expense of workers. If the Fed waits until unemployment starts increasing, it may be too late to cut rates in time to save American jobs. Why shouldn't the Fed act now to prevent workers from losing their jobs rather than reacting after the fact?
So we're well aware of that risk, of course, and very conscious of avoiding it. And what we said is, if what we expect and what we're seeing is continued strong growth, a strong labor market, and continuing progress in bringing inflation down, if that happens, if the economy evolves over that path, then we do think that the process of carefully removing the restrictive stance of policy can and will begin over the course of this year.
I mean, I know we've had this conversation publicly here or privately also that, working people are hit the hardest with inflation. They're also hit the hardest when companies try to cut costs with layoffs. This town too often seems to forget that maximum employment is part of the Fed's dual mandate. Let me ask you about bank supervision. Senator Scott mentioned that. Last year's bank failures illustrate the need for strong oversight. SVB grew too big, too fast. Fed supervision didn't react decisively enough. The Fed, in response, undertook an assessment of its supervisory process to identify and address gaps related to the speed, the force, the agility, if that's the right word, of its supervision. Explain what concrete steps the Federal Reserve's taken to strengthen supervision and any specific areas where work to make improvements is ongoing.
So this is a very broad area of work. There are, many people in the Federal Reserve System who are involved in supervision, thousands of them, and there's a rule book, and so there's been careful study and thought and a lot of listening to understand how we can meet those goals of being quicker and more effective. Basically, is how I would say it. If you look at Silicon Valley Bank, we weren't quick enough and we weren't effective enough where we were in, and so we're working hard to develop a new rule book and another set of practices, which is still going to be evidence-based and fair, but it's going to involve earlier interventions and more effective ones. And I think this is work that's ongoing and will be for some time.
Thank you. The job of the Fed, of all public officials, is to serve the American people, not their stock portfolios. We've seen abuses in this body. We've seen abuses at the Federal Reserve. I wrote to you last month asking the Fed to identify substantive penalties for board officials who violate the trading rules. Where is that in the process? And I expect these rules in place before the next monetary policy hearing in 6 months. Where is it?
We got our own Inspector General gave us 6 things to work on. I read the list from beginning to end, and the 6th one was what you said, and I just said we're going to do all of these. Let's get going. So we've done 5 of them, and we're working on the 6th.
And it will be finished within 6 months when you're back?
I want to get it right. I certainly hope so and expect so.
Expect so is a better answer than hope so. One last question. Many companies use algorithms that combine competitors' price information to engage in what they call dynamic pricing or surge pricing. You know that corporate PR teams worked hard on this. Just another way for corporations to make it harder for consumers to seek out lower prices and to pad corporate profits. Are you concerned that the wide adoption of these price gouging strategies, these pricing schemes, if you will contribute to inflation?
I mean, I think it works both ways. Let me say that, we're well aware of this trend and we're monitoring it. Remember that prices go down when there's no one in the store, and they go up when there are a lot of people if you're doing dynamic pricing. Same thing with the ride companies. It works both ways. I don't know that it have implication for, for inflation. It would certainly have implications for consumers who need to be informed.
You think that this kind of surge pricing might lower prices overall?
I mean, that's my understanding is that the idea is that in slow periods, prices actually go down, and in higher in busy periods they go up.
But these are sophisticated economists working for these big companies, and they're not going to do things to lower their profits.
I think the price mechanism is incredibly important in our economy. I think we need to give companies the freedom to do that as long as they're not fixing prices or failing to disclose the nature of the price changes to the public.
I have a few seconds. Research has indicated constrained supply was behind a significant amount of the inflation we've seen over the last few years. If the supply chain, for instance, of autos had been more resilient, or if there had been more housing availability, would that have made your job easier?
Yes, in a word. Yeah, a big part of the inflation was, and we saw it in 2023 when the supply chain problems unwound and when the labor supply shock that we had unwound as well. We saw inflation come down very quickly in the second half of the year. But it's also down to, tight monetary policies playing a role as well.
Which leads me to the plea with you to speak out about inflation, about the contribution of corporate profits and greed to inflation. Thank you.
Oh, I know you are done. That's true. Well, I was
Find yourself agreeing with me more and more often? Is that what?
that would be a nightmare, and I'm awake. So what I would say, however, is that the fact of the matter is that so often, if in fact 60%, I actually listened to what you said, which was remarkable. The fact that 60% of Americans today can't afford a $1,000 emergency, I can't imagine how the average millennial affords a down payment for a home. I can't imagine how they take into consideration when they're looking at a snapshot of their financial future, fixing and repairing or having a plan for obsolescence that happens for every homeowner in the country. I think the issue is far more complicated and would love to delve into that over the next 4 minutes and 18 seconds. But my first question is a combination between the challenges of illegal immigration and crime. It seems like every single week there's another story of another city underwater attempting to feed and house millions of illegal immigrants, and American taxpayers are footing that bill. Like I mentioned in my opening statement, just recently in Denver, we saw city workers having their hours essentially zeroed out so that the city could allocate more resources for the illegal immigrants. In San Francisco, they say that the average cost between San Francisco and Oakland, because of crime, is almost $4 billion. Couple that with in New York, you see Governor Hochul bringing out the National Guard and the state police to help reduce the impact of crime. At the same time, Mayor Adams says he needs more money because the state of affairs from illegal immigrants in the city is devastating the economy, scaring the citizens, and reducing the opportunity for business as usual to return to New York City. So my question is, can you explain how our economy is expected to continue shouldering the burden and the costs because of illegal immigration? And what, if any, information do you have as it relates to the impact of this surge of crime in our major cities on the economic outcomes of those cities? Because I heard the discussion that when you have more folks in the store, you have more shoppers, except for these days, when you have more folks in the store, sometimes they're just there to steal.
So you quoted my statement earlier, and it was an accurate quote, for which I thank you. But I would say right before that, what I said was immigration policy, very important, very much under discussion, and it's none of our business. We don't set immigration policy, and we don't comment on it. So,
But you commented on immigration. So my point, though, is that when you're going to tell a story, please tell the whole story, especially when the nation is frustrated by nearly 10 million folks by the end of this year coming into the country and having the kind of negative impact on prices, on crime, on the challenges that everyday Americans, especially Americans living in the poorest parts of America, face on a daily basis.
So as you accurately quoted, I said over time. So I
Yes,
was
sir.
referring to the history, which with you agreed. So I was staying as far as I possibly could from the current political context. And, it's really not appropriate for us. We're independent. We like to remain that way. And the way we do that, one of the ways is by staying out of political issues that we really aren't assigned. And so the kinds of issues you're talking about are very, very real. I don't deny that, but they're really not for us.
So the Fed does not consider the impact of 10 million illegal immigrants coming to our country and the costs associated with those illegal immigrants, nor do they consider the impact on states like New York or California or Illinois, where the devastation of crime ravishing the poorest Americans has an impact. We don't take that into consideration.
So, we do, and so does the Congressional Budget Office, we do try to estimate population, and we try to estimate the effect of immigration, legal or illegal, on the size of the workforce and on GDP. If you look at the Congressional Budget Office has, as you probably know, a detailed assessment of all the things like that. We don't really have a way, and we do look at the finances in the aggregate of state and local governments, and the hiring that they do. So that's something we look at, but we wouldn't do a very specific assessment like that. I mean, CBO probably would, but we wouldn't do that.
Thank you.
This has got Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Before I begin my questions, I want to celebrate that in the past year, we have seen the first Latino Federal Reserve governor and the first ever Latino Federal Reserve Bank president. These are historic milestones that show we are finally making progress, something that I have been at for quite some time, to the leadership of our economic institutions. So I want to applaud that. And Mr. Chairman, I hope that progress can continue and extend to the rest of the Federal Reserve staff.
Thank you.
I agree with my friend, the ranking member, that when you tell a story, you should tell the whole story. Mr. Chairman, are you aware of the Washington Post February 27th article that says the economy is roaring and immigration is a key reason?
I don't recall that, but I would have read it.
Let me read it to you. Immigration has propelled the U.S. job market further than just about anyone expected, helping cement the country's economic rebound from the pandemic as the most robust in the world. It goes on to say, economists and labor experts say the surge in employment was ultimately key to solving unprecedented gaps in the economy that threaten the country's ability to recover from prolonged shutdowns. Would you take issue with those statements?
There are a lot of adjectives and adverbs in there that you wouldn't see in Fed world. But the
Take out the adjectives and give me on the substance.
the story is, I think broadly, that there was a very significant increase in the size of the workforce last year, and it was happening all during the year, and we were wondering what it was. And the answer was it was really two things. It was labor force participation, but it was also immigration. And if you look at the Congressional Budget Office numbers, it kind of makes sense because there was a lot of growth. Wages were coming down. The economy is bigger. And those are probably in part effect. This is without making any judgments on immigration or immigration policy, but I think that's an economic
I'm not
fact.
suggesting that. I'm just suggesting the facts are
Yep.
We had 10 or 11 million jobs that were going unfulfilled in our economy. They lacked the productivity that is necessary for success economically. And as part of that, clearly, immigration helped fuel part of our revival coming out of the pandemic. In fact, those were the people who were the essential workers when the rest of us were staying home. So I agree we need to do what is necessary to have a regularized border. But I also think that just to create the context of immigration as a scourge is absolutely wrong. Let me turn to another question. In my view, the sticky inflation we've been seeing in the housing sector is principally due to the massive nationwide housing shortage. The Fed's monetary policy report attributes the shortage to restrictive zoning, high interest rates, and tighter underwriting by banks. I would also add to that list underfunding of key HUD programs that shore up and expand our supply of affordable housing. If the housing supply shortage continues to grow, are we likely to see continued housing inflation?
Yes, we are.
And housing is already becoming less and less affordable for low and middle income Americans. According to the National Low Income Housing Coalition's 2023 Out of Reach report, a worker earning the minimum wage in New Jersey would have to work 2 full-time jobs to afford a modest one-bedroom rental home at fair market rent. Do you agree that increasingly unaffordable housing is a problem for the economy?
I think there are two things going on. One is a longer-term housing shortage, and the other is the pandemic effects and the associated higher interest rates, which are things that will pass through. When all that passes through and rates are normalized, we'll still have the underlying housing shortage, and it's going to be causing upward pressure on housing prices.
Now, the monetary policy report noted that, quote, home purchases by low-income households have fallen disproportionately more because mortgage lenders impose maximums on the ratio of a borrower's debt service payments to the borrower's income. I'm worried about how this dynamic will interact with the recently proposed capital requirements proposal, which, according to analysis from the Urban Institute, would disproportionately increase the cost of mortgages for Black, Hispanic, and low and income moderate borrowers. Given this, isn't there a risk that if the capital rules implemented without changes, that it could make it even harder for disadvantaged borrowers to attain home ownership?
There is a risk like that, and we're very focused on it.
And hopefully you're working to mitigate it.
Yes.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator. Senator Rounds from South Dakota.
Thank you, Mr. Chairman. Chairman Powell, welcome back. Look, first of all, I've appreciated the way that you've approached the discussions in front of this committee, and I understand your desire to stay as neutral as possible with regard to the politics involved in an election year. But I do have some questions here, specifically with regard to the Basel III Endgame proposal. An analysis of that proposal found that 97% were either opposing it or expressing substantial concerns. In the hearing last March on the Monetary Policy Report, you stated that the Federal Reserve is a consensus organization, and you said, and I quote, I will do everything I can possibly to bring people together in consensus and have a capital framework that could be broadly supported. My question to that is, do you currently believe that there is a consensus on this capital framework?
I believe that we will have one. I'm fairly confident that we will have such a consensus when we do move forward.
So we could expect that you will probably not call a vote on the proposal until you believe that there is a consensus?
I think that's right. I mean, we're just in the process of digesting the comments and then making the appropriate changes.
Thank you. As you are aware, I've weighed in several times on the concerns that I have with regard to Basel III Endgame, including I'm concerned about the lack of transparency, the negative effects on mortgage lending and home affordability by disincentivizing banks from offering high loan-to-value loans that primarily help first-time home buyers and low to moderate income borrowers. I'm concerned that the proposal will make buying a home harder than it already is for many. And further down the road, I fear that it could disincentivize mortgage lending from the largest banks, particularly with regard to the secondary market and their impact on even smaller banks that do business with them. would you be willing to withdraw the proposal or re-propose with significant modifications, particularly addressing the concerns that I and others have on this committee, raising specifically with regard to the impact? And I'm thinking of Freddie and Fannie in particular and what the impact might be. What would you see as the process involving those particular issues?
So on those issues, we're well aware of and very focused on those issues. We haven't decided what to do about that yet, but we get it on those issues. In terms of process, we're not at the stage of making that decision. I will say if it turns out to be appropriate when we get to that point for us to repropose parts or all of the thing, then we won't hesitate to do so.
Okay, thank you. Makes me feel a little bit better because I do think there are some very serious problems that would occur if the Basel III Endgame as proposed goes into effect. And I most certainly am hoping that the Federal Reserve will find a consensus on this. And it sounds like that may very well include some significant modifications if it were to be brought at all. Is that a fair statement?
I expect there will be material and broad changes to the proposal before it comes back to the committee for consideration, the board for consideration.
Thank you, sir. Let's just, with regard to the economy today, a limited level of price growth is believed to help facilitate economic expansion, reduce the risk of recession, and help businesses and consumers plan. However, during the Biden administration, we saw inflation climb to 13%, and those prices are now the new norm. I know that you make it a policy not to comment on the administration's fiscal policy, but it is well known that I really do believe that high inflation and high prices have been a direct result of President Biden's policies, failed in many cases, that the Federal Reserve has limited tools to address some of the problems that these policies created. We talk about supply side versus demand side on these costs. What have been some of the unintended consequences from raising the federal funds rate as rapidly as you felt that you had to as the chair and as the committee? What are some of those? I know that we talked a little bit about SVP and the failure there, their inability to look at treasuries and the increasing interest rates and so forth. But can you talk a little bit about some of the things that you've seen that were negative with regard to trying to respond to those high inflation rates?
Yes. So high interest rates are hard for businesses. They're hard for people. They're the thing that they're the tool that we have to use to bring inflation down. And our job at this time, when high inflation comes, it is the Fed's job to restore price stability, and that's what we're doing. You point to the losses in banks. That was a very substantial thing, and obviously the supervisors, and that was us, didn't get to that problem. We were aware of it, but we didn't probably appreciate it enough. Another surprise, though, is that we were able to get this far and get inflation down this quickly without seeing a big increase in unemployment, and that's just a great result. That's just a surprise. It's not consistent with the historical record, but it's a really positive thing.
Thank you. And I would just know that the only tools you had available were demand side tools.
Yeah, that's right.
Thank you. Thank you, Mr. Chairman.
Thank you.
Senator Warner of Virginia is recognized.
Well, thank you, Mr. Chairman. Chairman Powell, it's great to see you. I would point out to my good friend from South Dakota, I do think, if we'd gone back a year to 18 months ago, nobody would have predicted a soft landing. And I know you're not ready to declare victory by any means, but the fact that inflation has come down, and I actually think some of the things like the CHIPS bill, the infrastructure bill, and some of President Biden's policies have actually kept the economy growth rate at the levels that have allowed you to bring down inflation without seeing a dramatic rise in unemployment. And again, that'll be something we'll probably have the opportunity to litigate over the next 8 or 9 months. I want to take my time on issues around less about monetary policy and more about regulation. I think we can never presume that we're out of the woods on financial stability, as we saw with the New York Community Bank yesterday, the stock plunge and the capital infusion. One area that I raised with you a year ago, I want to re-raise today, and that is non-bank lending. The fact that non-bank lending in terms of to non-financial firms now is actually exceeding regulated bank lending. And let me be clear, I've got The non-bank financial sector has done productive things in our society over the years. But when folks like former New York Fed President Dudley and former Governor Grosvenor recently said that they had worries about this reliance on the non-bank financial sector could lead to overall economic lack of stability. I guess, what do you think? I've got a three-part question. What do you think are the risks as we see this push-out effect of more and more lending going outside the regulated perimeter to the non-bank sector? How much do we really know about these institutions? And one of the things, they have very smart, sophisticated investors, but if those very smart, sophisticated investors said, well, hey, we don't like the lending profile right now, and we want you to not make any additional loans for the next 6 to 9 months, do you think our system would be able to pick up the slack?
So we have the regulated banking system where you've got a lot of transparency, you've got deposit insurance, you've got access to the discount window and all those things, regulation. If you go outside that, most of the funding that we see now in these vehicles is sophisticated investors who are actually limited partners, meaning they can't pull their money out. They've signed a contract, they've funded these deals. And so what you see now in the non-bank financial sector is significantly, it's that kind of thing. So it doesn't have the run risk. The point is, the bigger it grows and the more diverse it gets, it is happening outside the regulatory perimeter, and you worry that when there is another crisis, you'll be surprised, but there will be ways that financial structure too can break down, and it does break down in ways we don't anticipate. So I think we need to be smart about the way, about intermediation is absolutely moving out of the banks into the capital markets and into non-bank financial institutions. That's what's been happening for a long, long time. I just think we need to be thoughtful about understanding where the risks are emerging.
And that sophisticated investor may rightfully say, hey, we don't want you to lend anymore for a X period of time, but that may then, at that moment of crisis, mean that the lending capabilities completely dry up. And one of the things I never completely understood until I got a little better explanation recently, why the large regulated banks weren't more complaining about this non-bank lending. But as I got to understand a little bit more of the, and again, I'm not per se criticizing on the non-bank lending, but many of the regulated banks actually lend to these large institutions. So they make money off of those relationships. And maybe that's, again, an explanation of why they're not being more critical. I only got 40 seconds left, but I would like to come back to another thing that we've talked about a lot. And that is the question of use of the discount window. I believe one of the original tools that the Fed had, I know banks say, well, we're concerned about the stigma. I've got some legislation that would actually require mandatory use of the discount window. I'd love your comment on that. And also just the idea that having the mechanics of the discount window open, potentially even 24/7, because we saw with SVB, they didn't know how to use it, but two, if they wanted to use it in the non-bank hours, could they get access?
There's a lot of work to do on the discount window. You're absolutely right. It needs to be brought up technologically into the modern age. We need to do more to eliminate the stigma problem, and we need to make sure that banks are, actually able to use it when they need to use it. And those things, that's a broad work program that we're on right now, and it's very important.
I know you're working on it, but I would look forward to working more, and I'd invite other colleagues. I really do think before we start adding a whole host of the other regulatory issues, we ought to use some of the tools that are out there. You're not gone. So
God, I just checked in at the Veterans Committee. Senator Tillis, North Carolina. Thank you, Mark.
I was about to take control, Senator Warner. No. Welcome, Chair Powell, and Gus sends his regards. If you have time after the hearing, you ought to go by and see him. He's a dog in our office. But
I don't want to disturb his nap, but
but thank you for being here. I want to get back on this Basel III proposal. Senators Lummis, Coons, Gillibrand, and I sent a letter indicating our concerns with the current proposal. But I think it's also worth noting that the number of other organizations, a diverse group that are not normally aligned on policy. You got bank trades, National Housing Conference, NAACP, Habitat for Humanity, National Community Reinvestment Coalition, the list goes on, who have concerns with the current proposal. Here's my concern. I think we're trying to make the best of what was foundationally a bad proposal. And so I'm in the category of people who think that it should be reproposed, because I think one of the reasons why I did not support Mr. Barr's nomination is I felt like we were going to be here. I mean, it was pretty clear to me before he ever got confirmed on the board that we were going to be in this place some months or years later. And here we are. And I think that the industry felt the same way. All of these stakeholders, some of them are in banking trade, some of them are on the other side of the spectrum. So I'd like to cast my vote or provide some weight to the idea that we should repropose it. And what we ought to do is talk about the reality of increasing capital, or the prospect of increasing capital requirements doesn't concern me. I think the prior Fed supervisor had made comments publicly that maybe we needed to raise capital standards. But what we did here in this proposal, and I heard in that dialogue, is let's deal with puts and takes. Let's talk about raising capital requirements, but let's also talk about reducing the cost of the regulatory burden today if we can do it responsibly. There's no evidence of that in the current proposal, and I think that may actually produce a different set of comments that would be instructive to a final proposal that I think realistically will include some increase in capital requirements. So over what time horizon do you think we would expect to either try to make the best of this foundation or go back and take a look at a new foundation and repropose it?
You know, we're going to work through it as quickly as we can and should. I will say it's more important to get it right than it is to do it fast. We're not in a hurry. But my guess is we'll work this out over the course of this year.
Yeah. Well, if you take a look at the outsized cost of operational risk, the long list of concerns that I have publicly and privately expressed on the current proposal, I do think sometimes it's easier to knock down what I think is a poor foundation and build a better house. So again, just wanted to make that comment publicly. I got a question about shrinkflation. I tell you, some of these words that we come up with, but President Biden's using the idea of shrinkflation and chastising manufacturers for creating smaller portion sizes for potato chips. I'll use that as one example. But if you have rising input cost, and you're not able to control that, and you're in a marginal business to begin with, and now you're saying you can't even reduce the quantities. How does a business that's not making a profit make that work?
I mean, we see inflation at the aggregate level as a mismatch between supply and demand.
Yeah.
And as we've seen supply get better and we've seen demand cool off a bit, it was very hot coming out of the pandemic. We see inflation coming down.
We saw food inflation between 2010 and 2021 at 18% over 11 years. And over the last 3 years, we've seen it at 21%. I think that we have a industry that's trying to actually provide products that consumers want, and now they're being chastised for trying to figure out how to make the numbers work. So this whole idea of shrinkflation is just confounding to me. I'm going to submit some for the record. I want to stay on time. But I have a question. I think the chair mentioned, if I misunderstood this, I'm sure the chair will clarify, but I thought in his opening comments, he suggested that stock buybacks and paying out dividends were a key factor in inflation. Do you, as just a matter of policy, see stock buybacks and dividends as one of the top 5 reasons we're experiencing the inflation we have right now?
First, I guess I see stock buybacks and dividends as just the same thing in a different form. And I don't know, I wouldn't comment on anything the chair even may have said.
Yeah. Well,
I'd like to avoid that.
I don't think, I'm not going to ask you about policy because I think you're consistent on that, but I just can't imagine that if we decided to outlaw stock buybacks and dividend payments, that would have a material effect on inflation. So I'm not going to ask you to respond to that, but there are some people that by inference you could assume that they think that would be helpful. I just, for one, I'm not an economist, but I just can't imagine that it would be, one of the things that would make your job easier. Can you at least opine on that?
Banning stock buybacks and dividends?
Yeah.
Yeah, I think that would be quite a change in our capital markets. It
Yeah,
wouldn't-
me too.
I mean, shareholders, this is just money going back to shareholders from
Me
companies
too.
that have nothing to do with it.
Okay, thank you, Mr. Chair.
Well done, Senator Tilley. Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair. And thank you, Chair Powell. It's great to see you here again. I appreciate your testimony. And I'm going to focus my questions on housing and housing affordability. As you have well pointed out, overall prices have moderated considerably since the Fed began raising rates, yet housing costs have remained stubbornly resilient or high, leaving us really no closer to addressing the affordability crisis that I think that we have, and this was there well before the pandemic. Shortly before the Fed began tightening, Chair Powell, and you came before the committee, I asked you about how higher interest rates could exacerbate this unaffordability problem that we have by making mortgages more expensive and also hindering housing development. And I think that at the time you argued that we have a excess housing demand during the pandemic, and that was kind of at the root of higher costs, and that your goal, the Fed's goal, was to bring demand closer in line with supply. So my first question is this. So the housing market has cooled significantly over the last 2 years. Is it your view that it has cooled enough so that housing supply and demand is better in balance? And following on that, given the Fed's limited tools, understanding that, at what point will you think that you've done all that you can to lower housing demand? My view is that we're well past time in Congress to take action on the housing supply side, but I'm interested in how you see this dynamic.
So we're not focused so much on housing and housing inflation. We're really focused on the aggregate, which is also
Yep.
goods and non-housing services. That's way more than half of the PCE inflation. There are things in the housing sector that we didn't fully anticipate. One of them just was that people in very low interest rate homes with very low interest rate mortgages aren't selling.
Right.
So the quantity of homes that's available is incredibly low, and that's why it's very little in the way of existing home sales, and that drives up existing home sale prices, but also new home sale prices. So again, there's two sets of factors. There's the longer run issue, but then there's the factors associated with the pandemic and the inflation and our response to it. I think as the overall inflation continues to come down and rates then come down, you'll see the housing market start to heal and get better, and housing affordability should go up again. But you're still going to be left with the longer term problem of supply.
Right. I think that's right. I mean, what I see in Minnesota is that higher interest rates are, of course, driving up the cost of construction. They're driving up the cost of mortgage rates. You're seeing people who aren't leaving a house that maybe is a little too small for them because they can't afford it, that the housing, just as you're saying, people are staying in their homes longer. And so there's sort of this double whammy of construction slowing at the same time that there is this great need to address housing supply. One of the things that is happening, it's interesting, a recent analysis by Zillow found that the monthly mortgage payment let me get this right. A recent analysis by Zillow found that the monthly mortgage payment on a home, on a $343,000 home, assuming 10% down payment, is about $2,200 a month. Okay, so $2,200 a month. That means the cost of owning a typical home is higher than 30% of median income, which is kind of the measure of affordability. And so we've got a lot of issues with people just being priced out of the housing market. So from where I sit, the cumulative issues of higher mortgage rates are just really a challenge. And until we can get to the bottom of that, we're going to have a hard time addressing the housing affordability challenge that we have. Would you like to comment on that?
Yes, I agree with all of that. I mean, home prices don't actually go into the calculation of inflation. It's really rents and
Right.
owner's equivalent rent. But
Kind of like this.
I agree, the housing market is in a very, very difficult situation. And, the sooner we can get back to price stability and restore interest rates to lower levels, the sooner it can start healing.
Yeah, Thank you. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Kennedy of Louisiana is recognized.
Mr. Chairman, thank you for being here. Thank you for your services. I think I've said before, I believe you and your team probably saved the world economy during the pandemic economic meltdown when the whole world wanted dollars by establishing the currency swap line. So I thank you for that. You gave an interview, Mr. Chairman, on February 4th of this year to CBS, 60 Minutes, I think. Is that right?
Yep.
I ordered a transcript of that hearing, which I read. I learned a lot reading it. You were asked a question about inflation, and you asked a question about prices declining. And here was your response. I'd like to quote you, if that's okay. Quote, "So the prices of some things will decline, others will go up, but we don't expect to see a decline in the overall price level. That doesn't tend to happen in economies except in very negative circumstances." End quote. Did I quote you accurately?
I believe you did.
Okay. Later in the interview, you were asked about the national debt. Do you recall that?
I don't actually, but I'm sure that's right.
Okay. Well, at least according to the transcript, your answer was, and again, I'm quoting you, "In the long run, the United States is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path. And that just means that the debt is growing faster than the economy. So it is unsustainable." End quote. Do you remember saying that?
I've said that many times. I think that's uncontroversial.
Okay. Later in the interview, you said, I want to quote, "You know, I would just say this, integrity is priceless. And at the end, that's all you have. And we plan on keeping ours," end quote. Is that an accurate statement?
Yes, it is.
Okay. That's why I want to ask you about the FDIC. Have you read the article in the Wall Street Journal entitled, quote, "Strip clubs, lewd photos, and a boozy hotel, the toxic atmosphere at bank regulator FDIC," end quote?
I think I did read that a couple months ago.
Did you read the article entitled, I quote again, "FDIC lawyer stayed on paid leave for weeks after child porn arrest," end quote?
I don't remember that one.
Okay, did you read the article entitled, also in the Wall Street Journal, quote, "FDIC chair, known for temper, ignored bad behavior in workplace," end quote?
Honestly, I don't. I read so much, I can't, I remember the broad story, but not particular stories.
Did you read the article in which a former female employee of the FDIC allegedly recalled her male colleagues saying women needed to use sex to get ahead at the FDIC?
I do not recall that. No.
Okay. Did you read the article in which a female risk management examiner during a lunch with a male examiner said she had become friendly with that examiner, and he complained to her about his marriage, allegedly, telling her he wasn't getting enough sex. And she allegedly said, quote, "Obviously, if I walk," or he allegedly said, "Obviously, if I walked into this office and you were naked, I'd fuck you right here," end quote?
I do not remember that, and I think I would.
Okay. Do you remember the article about Mr. Randall Ditch, a supervisory examiner in Denver, who allegedly was demoted in 2014 to a non-supervisory examiner position in Tulsa after having sex twice with a subordinate female employee and a number of other rule violations. In this article, it says allegedly Mr. Ditch had urged the woman to not, quote, be a pussy, close quote, and drink a shot of whiskey during work hours, the records show. Do you recall that?
I do not recollect that.
Okay.
No.
Here's my question. I could go on for a while.
Could go on, but you're not going to go on. So you've passed your 5 minutes. Do your question once.
Sir?
Senator Kennedy, your time's already expired. You can do one. You did 5 minutes, consumed the whole 5 minutes with your monologue of,
Well, you did 6 minutes. I timed it.
I asked my,
You did 6 minutes.
Senator Kennedy, for months, I have let you go way over the 5 minutes. You get your question,
But you did 6 minutes.
I chair this committee.
I understand. You still did 6 minutes. Check the record.
I'm going to order, you're going to be at 6 minutes and 15 seconds if you continue this argument,
Well,
or
that's-
you're going to ask your question.
I'll ask my question. I just wanted the record to be clear, Mr. Chairman. Mr. Chairman, in light of these allegations, if they're proven, how can the FDIC lead this charge for Basel Endgame 3, which is going to turn the banking community upside down?
I don't know how I would make the connection to Basel III. I'll say this deeply troubling things, obviously, but again, you know, as your point was, if proven, and I mean, I think we have to decide Basel III on its merits, and we're not looking to the FDIC to lead this, by the way. We're looking at the Fed to do what the Fed thinks is right. That's what we're going to do. We don't look to, and they don't look to us to lead them.
Thank you, Chair Powell. Senator Butler is recognized.
Thank you, Mr. Chairman.
Thank you.
Senator Butler is recognized.
Thank you so much, Chair and Chair Powell. Good to see you in person, and thanks for the time to talk. I want to pick up a little bit where Senator Smith was in relationship to housing affordability, and hopefully draw a little bit on the point that you were making about rents. It definitely is an important crisis in my state of California, and I know across the country, where, at least according to the California Department of Housing and Urban Development, renters in San Diego are paying about 50% of what is, they're spending more than 50% of what is considered affordable. And statewide, the majority of renters, more than 3 million households, are spending more than 30% towards rent. Nearly 1/3, more than 1 in 5 million households pay more than 50% of their income towards rent. And the Chicago Fed President Goolsbee even referred to housing as a missing piece of the puzzle in the Fed's path to lower inflation. So to the continued conversation, and I know a point that you've made that about how inflation has a disproportionate impact on lower income households who are focused on spending more of their monthly budgets on housing. How is the Fed's monetary policy impacting the supply of affordable rentals?
I don't know that we're affecting the supply of affordable housing. If you think of affordable housing as something that's connected to some sort of government program, that's not our bailiwick. I mean, clearly interest rates do affect the affordability of housing, though.
And there was a key point that you made in an earlier, I think, reference about, and in your response to Senator Smith about the monetary policy and the calculation of rents. Can you just spend just briefly talk about that? I want to have one last issue I want to get to before I run out of time.
It's hard to talk about it briefly. It's actually very conceptually challenging to think about housing inflation. Do you include the costs of financing it? Do you include the sale prices? And the answer is we don't. We convert ownership into an imputed rent, and that's 2/3 of homes are owned. And then we actually measure rents, but leases only turn over once a year. So you look at market rents, and what's happening with newly signed leases may be very different from what was happening a year ago. So it's complicated, but the good thing is we understand all that, and we look through that. We look at housing services overall as one of the 3 important categories, along with non-housing services and goods inflation.
Thank you for that. In the line of affordability and housing, again, sort of very general, I think, to the broad monetary policy and state of our economy and unique to California, And I raised this with Secretary Yellen when she was here as well, the insurance gaps that are presenting themselves due to the impact of climate change. Where 1 in 5 residents in California live in areas of that risk flooding, and all 58 counties have a history of flood damage. And we are seeing more and more insurance providers, home insurance providers, actually withdrawing from the state. You and I had talked a little bit about this in our preparation for today's conversation. Can you talk to me about or share with us how it is that or what you think the impact might be of this sort of protection gap in insurance coverage on the overall stability of financial institutions in the broader economy?
So it is clear that insurance of various different kinds, housing insurance, but also automobile insurance and things like that, that's been a significant source of inflation over the last few years. And it's to do with a million different factors. It's nothing that we control from a regulatory or a supervisory standpoint. In the longer term, companies are withdrawing from writing insurance in some coastal areas, and you got to think 10 years from now, how are you going to get housing insurance? And maybe the government will have to step in, but it's a significant issue.
Thank you, Chair Powell.
Thank you.
I was.
Senator is next. Yeah, Vance. Senator Vance of Ohio is recognized.
Thanks, Mr. Chair, and my gratitude to you and the ranking member for doing this hearing, and thank you, Chairman Powell, for being here. It's good to see you again. I think these hearings are always very important. Actually, give us an opportunity to sort of provide some oversight to what's going on at the Fed and better understand some of the things that you guys are doing that affect our constituents. Now, I wanted to sort of focus on the Basel III regulations, Chairman Powell, and specifically the way that they have. There have been various proposals to sort of draw them down to focus on the regional banks. And to just go back to sort of one of the most significant crises, obviously, in our banking sector, of course, the collapse of SVB and First Republic. You and I have spoken in private and I believe in public, but one of the concerns that I have is when we talk about increasing capital requirements on the banks. If the banks were under higher capital requirements in the run-up to the crisis, there's maybe an argument that SVB, for example, would have bought more long-term treasuries, which would, of course, expose their balance sheet to even more treasury bond risk. And that, of course, would have maybe hastened the collapse of SVB. And I guess I want to start here with, when we talk about, some of the Basel regulations, what was the original intent? In other words, what was the original sort of proposal for which banks would fall under those regulations and which would escape them?
You mean this time around, or earlier on?
This time around.
So it's the 37 largest banks. It's down to there's 4 categories of banks, including the G-SIBs, and this is down through the 4th category. The proposal that's out there now, I think, does extend to Category 4 as well as 3, 2, and 1.
So what's the minimum assets under management that you guys have proposed, the current
billion.
Basel regulations?
100 billion.
100 billion.
Yeah.
And sort of that sort of gets to my concern here, because I know there's some discussion about whether you apply them at $700 billion of AUM or $100 billion of AUM. And maybe you could just sort of walk me through that decision process at the Fed, where you guys are and what would sort of justify drawing down from a $700 billion threshold to a $100 billion threshold.
So there's the G-SIBs, there's the 8 identified G-SIBs, and then there's 1 Category 2, I guess, and then there are the big regionals, and those tend to be well-known big regional banks, and they're Category 3, and one of them's a 2, I guess, but they have a different tailored level of regulation. And then Category 4 had significant tailoring. And the question is, we have to ask the question, since SVB was a Category 4, we've got to ask the question, what, if anything, needs to be changed in the way they were regulated, supervised from a capital and liquidity standpoint. So there was tailoring all the way down. And then below 100, of course, those are community banks, and that's a different regime as well. This makes sense. We want to have a diverse banking sector. That's a great benefit to our country and very unusual for an advanced economy. So it's something we want to preserve.
Yeah, and I'm sure you know, Chairman Powell, but just to put this on the record, I mean, a lot of the commercial lending, a lot of the real estate lending, a lot of the consumer lending, about half of that lending, consumer lending, is provided by the regional banks. I believe the Huntington in my home state of Columbus is the #1 SBA lender in the entire country. So these, to your point, I think these do provide incredibly important benefits to our economy. And you hear a lot of people talk about the American economic miracle, and I do wonder if part of that is because we don't have the same type of financial system that has sort of dominated in Western Europe and other first world economies. I'm curious, in the process of amending the Basel requirements, I mean, have you guys made a decision about where to set the threshold yet, and when do you expect to set that threshold?
We haven't made any final decisions. We put out for proposals some months ago, a proposal, and we've gotten a lot of comments, as I'm sure you're aware. We're chewing through those and digesting them, and we're just beginning now to sit down and talk about the changes that will appropriately make to the original proposal.
And when do you expect to sort of issue a final proposal?
I think it's going to take some time. I think it's more important to do it right than it is to do it fast. My guess is we'll get through this and be done over the course of this year, but it could be faster than that. It could be slower than that.
So I'm wondering, just being mindful of time, I have about 30 seconds left. Would you be willing to commit to say that in the process of amending, the Fed will remove the regional bank drawdown and limit Basel's application directly to the G-SIBs or $700 billion or above?
I can't get that specific at this point, but we're clearly looking at the whole tailoring issue.
I appreciate that. And again, I just repeat, Chairman Powell, given what actually happened with the banking sector with SVB and First Republic, I just encourage you guys not to apply a regulation that doesn't actually solve the underlying problem. And I fear that if you apply this to banks of $100 billion and above, you actually are doing just that. So with that in mind, I'll yield. Thanks, Mr. Chair.
Thanks, Senator Vance. Senator Tester of Montana is recognized.
Yeah, thank you, Chairman Brown, and thank you for being here, Chair Powell. We appreciate your work in a difficult situation, but I think you've done a really good job, and so thank you for that. Look, at success at the Fed on your mandate for strong employment and stable prices is critical for small businesses on Main Street, for farmers, for ranchers, for Montana families. You follow all the metrics. From your perspective, where is the economy at now, and where's it going?
The economy's growing at a healthy, sustainable, solid, strong pace, and that's one thing. Second thing I'd say is the labor market is very strong and quite tight still. 3.7% unemployment for the last 24 months. That's the longest period since 50 years. And the third thing is inflation. Inflation was too high. It's come down very sharply since the beginning of last year. If you look at the 12-month number, the headline number has come down from the 5s down to 2.4. And the core number is at 2.8. I think it was at 4.9 a year ago. So these are big declines. So we're in a very different place, in a healthy place. We're going to use our tools to try to keep that strong economy, keep that strong labor market while we continue to make progress on inflation.
One of the areas where there has been inflation, and I don't exactly know where it's at now, but food rose quite rapidly. And by the way, I'm a farmer. We didn't get much of that. In fact, we didn't get any of it. Prices now compared to what they were a year ago are actually off. Compared to where they're 6 years ago, they're up. But compared to where a year ago, they're down. And so my question to you, Chairman Powell, is there anything you can do specifically to deal with food costs?
So as I'm telling a farmer his business, but if you look at the food cost to the consumer, part of that is commodity costs, and that was partly spiked because of Ukraine, grains and oil and that kind of thing. But the rest of it is a lot of costs in the supply chain, from when it leaves the farm to get collected and processed and trucked around and then put on the shelves and then the stores, and all of those costs are just part of the general economy. So as the labor market cools off from its overheated status 2 years ago, you will see, and you have seen, food inflation flattening out. And so, the really high rates of inflation have come down. The prices, of course, have not.
Correct. I would just say that cattle's doing better. Grain actually has dropped in price at the farm gate, and I don't want to get into that debate with you at all because we probably agree, but it'd take too long, take too much time. We got other stuff to talk about.
I'd be learning from you.
You've discussed in previous hearings the impacts that the pandemic, shutdowns and supply chain issues have had on economies globally. How does the U.S. economy look today compared to our competitor nations, particularly China?
Well, I start with the advanced economies. We're doing the best of anybody. We've got the strongest growth and the lowest inflation of the advanced economies. China is a whole different story. China is having, significant difficulties with its economy right now, and they're in a very different place than certainly than we are.
And so to repeat that, what I heard you say is that the economy of the United States is basically in better shape than any other economy in the world?
Any other major economy, yes.
Yes, okay. Look, one of the other challenges out there is housing in communities all across this country, whether you're in Montana, whether you're in a city in Ohio. Workforce housing in particular is a top priority, top commodity, so to speak. Plenty of folks, great organizations are working to address this. I meet them every day, and I appreciate the work they're doing. But how do these housing supplies issues show up in the data that the FOMC uses to make decisions?
So housing prices don't go into the data. Housing starts and renovations and things like that are just business activity, and that shows up. But when it comes to inflation, we convert ownership into an imputed rent, and then we look at rents. Okay. And so that's how we look at all that. So we're not directly affected by changes in housing prices, but over time those will drive rents up.
So is it fair to ask, are there economic trends that you see for housing?
Yes. So there's two big things going on. One is we have this underlying shortage of housing, and it's due to things like difficulties of zoning. A lot of the close in to cities, places are already built, and so more difficult to get zoning, more difficult to get people and materials and all that. That's one thing, and that's not going away. Then there's just a ton of things happening because of the pandemic, because of inflation, because of higher rates. And those are, in the short term, those they're weighing on the housing market. But as rates come down and that all goes through the economy, we're still going to be back to a place where we don't have enough housing.
Well, once again, thank you, Chairman Powell, for your work. I very much appreciate it. Thank you, Chairman Brown.
Thanks, Senator Tester. Senator Kramer of North Dakota.
Thank you, Mr. Chairman. Chairman Powell, good to see you. Thank you for being here. It's been a rather uneventful couple of days for you, considering you've spent 2 days in this place. And I'm not going to upset that, by the way, just so you know. But I did appreciate your response earlier to Senator Scott when he asked about immigration, and you said the Fed hasn't been assigned that. So I want to bring up something else you haven't been assigned to that you and I have talked about over the years, and that, of course, is climate, the role of climate in your job, the role of climate risk in banking. And you've often said, I think the most common statement was, we should stick to our knitting, I think is one of yours, stay in our lane, similar to what you said probably to Senator Scott. But that said, in October, the Fed, the OCC, FDIC issued climate guidance, as you know, for management of covered institutions. And so I'm just kind of curious, did Congress somewhere along the line give the Fed authority over climate policy as well? Or is that another one of those things that somebody just took on? And I realize you're not the dictator of the Fed, only the chairman of the Fed. But I'd be interested in, as the chairman, your views on it.
Our assignment is the safety and soundness of banks, and that they understand and can manage the risks that they face. That's our assignment. And we said in climate world, we would do two and only two things. One of them was to do illustrative stress scenarios, scenarios, not stress scenarios, climate scenarios, so that, the banks are already doing this. The large banks who are subject to this, they're already doing it because they're doing business internationally and they don't have any choice. So we said we'd do that. And we also said that we'd offer guidance on, not on level of climate risk or anything like that, just on what you had to do to be in a position to assess. And that's, for my thinking, that's it. That's what we're doing. And we're not doing it. There are no new initiatives. We're not going to change our capital requirements to reflect climate risk or anything like that. I'm really determined that we are not a climate policymaker, and that is really the business of elected officials.
Very good. Thank you. I'm going to bring up one other topic. I don't know that's been brought up today, and that's central bank digital currency. I think from a lot of my friends out there, I think there's some, well, I know there's some confusion. I mean, I'm easy to confuse, but there are a lot of people that get confused about what is meant by the administration's, admonition to continue researching, experimenting, looking at some sort of a, central bank digital currency. I think people back home look at that and go, oh my gosh, they're going to control this now. And could you maybe just differentiate a little bit what people think of in terms of a Bitcoin or their held digital currencies versus what a central bank digital currency, who, in my view, should emulate cash, right? It still should be about the dollar, not about some different kind of currency. Could you just sort of help people back home better understand why they shouldn't be quite so frightened?
First of all, I want to say that we're nowhere near recommending or let alone adopting a central bank digital currency in any form. But the idea is that as technology has evolved, money has become digital. So, but the government doesn't issue digital money. It's digital. If you look at your bank account, people don't hold those physical dollars. They're digital. So the thought was that the government could create a digital form of money that people could then transfer among themselves. Now, of course, that raises a concern that if that were a government account, that the government would see all your transactions, and that's just something we would not stand for or do or propose here in the United States. That is how it works in China, for example. But that's not what if we were to ever to do something like this, and we're a very long way from even thinking about it, we would do this through the banking system. The last thing we would want, we, the Federal Reserve, would want would be to have individual accounts for all Americans, or any Americans for that matter. Only banks have accounts at the Fed. And that's the way we're going to keep it. So it's just really, it's a question of following technology as it evolves and in a way that serves the public better. People don't need to worry about a central bank digital currency. Nothing like that is remotely close to happening anytime soon.
That was very helpful. Thank you, Mr. Chairman. Thank you, Chairman.
Kramer. Senator Cortez Masto of Nevada is recognized.
Thank you, Mr. Chairman. Chairman Powell, great to see you again. Thank you for all of your good work. I want to talk a little bit about the commercial real estate and what's happening there. The Financial Stability Oversight Council's 2023 annual report identified commercial real estate as a financial risk. And the Fed's monetary report also noted commercial real estate prices continue to decline, especially in the office, retail, and multifamily sectors. I'm especially concerned that because of the low levels of transactions in the office sector, prices have not yet fully reflected the true decline in the value. So can you expand on the emerging risks the Federal Reserve has identified in the commercial real estate market, one? And then I'm curious, can you discuss the compound risks identified in commercial real estate lending, particularly at banks with large CRE concentrations and high fractions of uninsured deposits?
Sure. Let me say, I think there are just very, very few transactions in commercial real estate right now, particularly in the troubled areas. So it's not a question of prices still falling. It's a question that you don't have the kind of price discovery. You just have to assume that the prices are very low and have come down a lot. So on commercial real estate, we have a secular change in people working from home. This is one big part of it. That means that in many cities, the downtown office district is very underpopulated. There are empty buildings in many major and minor cities. It also means that all the retail that was there to service the thousands and thousands of people who work in those buildings, they're under pressure too. And banks will have made loans to many of those buildings. Not all of them, but many. So this we've known for some years. And so what do? We have identified the banks that have high commercial real estate concentrations, particularly office and retail, and other ones that have been affected a lot. We identify them, and we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them. And so for some time we've been doing that. And this is a problem that we'll be working on for years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first order issue for any of the very large banks. It's more smaller and medium-sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you. Do you have concerns? Let me just ask you this. As you're talking with these small and medium-sized banks, because we know there's always could be a contagion, which we've seen in the past, do you have concerns that if they fail, that somehow this is going to impact the financial sector? And are you prepared and trying to address that and prevent that from happening?
We're trying to stay ahead of that. So we also reached out to banks that had high concentrations of uninsured deposits, and particularly uninsured deposits, and a lot of commercial real estate in the office sector. So we're well aware of that issue, and we're just trying to stay ahead of it on a bank-by-bank basis and overall.
Okay.
And so far, we've been able to do that.
Thank you. Let me jump to another issue that has been on my radar. The Federal Housing Finance Agency's report on the federal home loan banks concluded that the distinction between the FHL bank's role and that of the Federal Reserve discount window as lender of last resort has not been clear, especially during times of market stress. During the 2023 banking turmoil, we saw banks rely on advances from the federal home loan banks and didn't even have relationships with the Federal Reserve to use its discount window. I know you've talked a little bit about this with Senator Warner, but how is the Federal Reserve working with the federal home loan banks to ensure that banks establish protocols to borrow from the Fed's discount window prior to times of stress?
So we work with the federal home loan banks because in many cases, banks were moving their loan from the Federal Home Loan Bank to the Fed. So we need to have smooth transfer. We need to be in good touch with them. Even more important than that, though, is that banks, any bank in the United States, needs to be in touch with the discount window, know how to be able to access it, have appropriate collateral, have control of that collateral. In many cases, it was incredibly inefficient and took a long time for banks to actually go through that function. The federal home loan banks are actually ahead of us in technology. We know that we need to really invest in technology to modernize the discount window, and also we need to do more to get our banks, all of them, in touch with the discount window in a way that they can use it quickly should they need to do so.
Thank you.
Cortez Masto, Senator Haggerty of Tennessee is recognized.
Thank you, Chairman Brown. Welcome, Chairman Powell. Under your tenure, Mr. Chairman, the Fed has taken the stance that the 2% inflation target shouldn't be viewed as a snapshot in time, but rather it needs to be achieved, quote, sustainably. When inflation was running well above the 2% target back in 2021 and early 2022, the Fed was patient and allowed rates to offset the below target inflation that had occurred in the years prior. It strikes me as odd now that while we're still well above target inflation and have been well above for the prior year, markets seem to expect the Fed to immediately cut even before we've breached the 2% inflation threshold. So my question is this: if the inflation rate reaches 2%, would that be considered a return to the target rate on a sustainable basis? Or is it still the case that inflation would need to more or less overcorrect to well below 2% before the Fed makes the rate cut adjustments?
So it would take us a while to really get comfortable that inflation had settled in sustainably at 2%. But that's not our test for changing interest rates. Interest rates right now are well into restrictive territory. They're well above neutral. And we've said we would not wait for inflation to get down to 2%, because if you wait that, monetary policy works with long and variable lags. So we've said, for some years that we would start restoring the federal funds rate to a more normal, almost neutral level. We're far from neutral now.
Yeah.
And so, we do plan, assuming the economy moves along the lines we expect, we do plan on starting the process of dialing back restrictions.
I'm just trying to look for the symmetry. I know we sort of allowed the economy to overshoot when inflation was high, and we sort of made up for prior years of low inflation. I'm trying to square that with the fact that
we didn't actually do that. We adopted a framework that said we would do that, but then we got suddenly, a few months later, we got almost an explosion of very high inflation. That's not what we were looking. We said, moderately above or modestly above 2%. This was not modestly above 2%. And we reacted. We thought that the mistake we made was we thought that inflation would go away.
That it was
quickly.
transitory.
Transitory, which means it goes away quickly without effort by us. We figured out at the end of 21 that was not the case, and we acted.
And you don't see that same abrupt dynamic coming the other way. You're more comfortable.
No,
with
I
the
think, look, I think we're in the right place, which is we're waiting to become more confident that inflation is moving sustainably at 2%. When we do get that confidence, and we're not far from it, it'll be appropriate to begin to dial back the level of restriction so that we don't, drive the economy into recession rather than normalizing policy as the economy gets back to normal.
Yeah. Can we go to the balance sheet and talk about that? We've seen a dramatic expansion of the Fed's balance sheet over the past couple of decades. In 2005, it was at $800 billion. It's at $7.5 trillion today. It's doubled since the pandemic was underway. And through quantitative tapering, the Fed is attempting to reduce its footprint. And the concern I have is, on the other hand, government spending tends to just continue to be profligate. We're running now a $1 trillion deficit every 100 days. And we're flooding the market with Treasury debt, and we're putting upward pressure on interest rates as a result. And what I think that is lost on many of us here is that the spending levels will only make your job harder when it comes to lowering interest rates, not to mention there's a tacit expectation that the Fed will step in once the markets can no longer absorb our new issuance. I think this is a very serious problem. I think it deserves more attention. And I think we're now at a point where your objectives may be very much at odds with the behavior of our fiscal policy. Am I missing something here, Mr. Chairman, or does increased net issuance by the Treasury lead to higher rates?
I mean, in principle, more supply should lead to modestly higher rates, but that's not going to affect what we do. That's not a problem for us. Our balance sheet normalization is running very much as expected. We've decreased the size of our holdings by almost $1.5 trillion.
I hear you. I think it's troubling that we continue to put fiscal pressure by continuing to put, again, we're running a deficit of $1 trillion every 100 days, and the issuance is required to deal with that. We're putting a lot more pressure, I think, on the Fed, and again, making your job harder. I think we need to take that into consideration. Another component of this topic, your colleague Governor Waller said he'd like the Fed to shift its holdings toward a larger share of short-term treasuries. Back prior to the financial crisis, about a third of the Fed's holdings were in bills. Now they're around 3% of your total securities holdings. Do you share the goal with Governor Waller? And if so, how long will it take us to get there?
Take a while. That's an issue. We're in our FOMC meeting in a couple of weeks. We're going to have our first really deep dive on what to do with the balance sheet. That's one of the issues. I don't think we'll deal with that at this meeting, but over time, you'd love not to own a lot of MBS, and I could see a case for shortening the maturity, but it's not something that would happen quickly, and we're not actively looking at that. That's sort of a longer term aspiration that I think he was saying.
Just one final point, Mr. Chair, and you and I have talked about this before. We're in an election year. You're getting a lot of pressure. I hear it from lawmakers to adjust rates. I'm not telling you to raise rates or lower rates, but I'm just here to emphasize the fact that the credibility of the Fed depends on your remaining data-driven. The credibility of our currency as the reserve currency of the world depends on that, and I encourage you to continue to maintain that posture. Thank you.
Will do.
Thanks, Senator Haggard. Senator Warren of Massachusetts is right.
Thank you, Mr. Chairman. So it's been a year since we had the second, third, and fourth largest bank failures in American history. Greedy bank executives were part of the problem, and the Fed, as the chief regulator of the biggest banks, was part of the problem. Under your leadership and direction, the Fed steadily weakened rules for the biggest billionaire banks, exactly the banks that failed last March. In other words, Chair Powell, you failed to do your job to keep these big banks in line. Now, when these banks blew up, you went into spin mode, promising that the Fed would do better. After years of hemming and hawing, you finally agreed to put in place Basel III rules that would strengthen capital standards for the biggest banks. And I mean the biggest banks. The Fed's proposed rule would apply to only 37 of the nation's 4,500 banks, only the banks that have $100 billion or more in capital. Now, Chair Powell, when you testified before this committee last June, I asked you about taking responsibility for bank failures. And you said, quote, "The main responsibility I take is to learn the right lessons from this and to undertake to address them so we don't have a situation like this where we had unexpectedly a large bank fail and spread contagion into the banking system," end quote. And as part of learning those lessons, you also said, quote, "that you agree with and support," end quote, Vice Chair for Supervision Barr's recommendations for strengthening the Fed's rules and supervisory practices for the big banks, and that you're, quote, "confident they will lead to a stronger and more resilient banking system," end quote. So I just want to be clear. You haven't backed down from any of your comments from a year ago, have you, Chair Powell? Right lessons, don't let this happen again, supporting Vice Chair Barr's recommendations, which include stronger capital standards.
No.
You still stand by all that?
Yeah.
Good, good. I'm glad to hear that. Now, I understand that those 37 big banks don't like higher capital rules because they are like insurance. You know, they would make the banks safer, but they cost a little money and would nip into the bank's profits. So these 37 banks are swinging their very considerable weight around to try to weaken the capital rules. They've spent tens of millions of dollars running ads during Sunday night football and millions more for an army of lobbyists to try to twist arms here in Congress. Impressive spending, but who exactly are they trying to impress? A man on the inside? You know, despite all you said last year when the banks failed about supporting Vice Chair Barr's recommendations to strengthen rules for big banks, public reporting now says that you are driving efforts inside the Fed to weaken the capital rule. You even told the House Financial Services Committee representatives yesterday that you think it's, quote, "very plausible," close quote, that you withdraw the rule. As one analyst put it, quote, "I don't think they will pass a final rule without Powell's support," suggesting that the rules will have to be weakened, quote, "to appease Powell." So, Chair Powell, I'm having trouble reconciling the statements you made last year, which you say you hold on to, statements you made when the headlines were all about 3 giant bank failures, and now your reported efforts to quietly weaken the rules that would strengthen capital standards for giant banks and prevent more bank failures. So let me just give you a chance to clarify the record here. Are you committed to finalizing the strongest version of the Basel III capital rules this year?
Let me first say that we have taken and are taking many more steps to deal with the problems that revealed themselves with Silicon Valley Bank, and that's around supervision. We'll have a strong liquidity.
I appreciate that, but I'm just asking about the Basel III rules, the ones that you have been required for years now to put in place and have dragged your feet on.
The Basel III rules are not directly related. They're not the thing that is directly related to Silicon Valley Bank. As you point out, they're a longer run thing, and I would just say that we put them out for comment. We got the comments. Anybody's free to go read the comments. My view is that it will be appropriate to make material and broad changes to that before we finalize it. And in terms of, I didn't say that
Material and broad changes to strengthen the rules?
material and broad changes, and we're talking about what that'll mean in the end. I did not say that we would withdraw the rule. I said, there's a concept of reproposal, and I said we hadn't made a decision on that, but that if that turns out to be appropriate in the view of the Board of Governors, then that's something we would look at doing.
So everything you said a year ago about supporting the vice chair who is responsible for writing these rules?
You and I had a long colloquy.
Yes, we did.
If you read it again, it's on your website.
And I have.
You will see that I'm doing exactly what I said I would do in that
No, you
colloquy.
said you would support Vice Chair Barr to get us strong rules, and now he is putting out rules,
that
and
was
you're
about
talking
Silicon
about
Valley Bank.
reproposing.
The Vice Chair for Supervision has every right to bring proposals to the board. That has happened, but as I made clear in our colloquy, you're not the comptroller of the currency. This is when I do monetary policy, I have one vote. There are 11 other voters. And that's the way it works. It's not different for the
You-
vice chair for supervision.
You are the leader of the Fed, and when the heat was on last year, you talked a lot about getting tougher on the banks, but now the giant banks are unhappy about that, and you've gone weak-kneed on this. The American people need a leader at the Fed who has the courage to stand up to these banks and protect our financial system. Thank you, Mr. Chairman.
Warren, Senator Daines of Montana is recognized.
Chairman, thank you. Chairman Powell, thanks for being here. Good to see you. I can tell you Montanans are continuing to see the impacts across the board from inflation that's been brought on by the policies of this administration and by my colleagues across the aisle. And I commend you for the job you have done in trying to rein in inflation, and I encourage you to continue the fight despite political pressures you may face. Last time I checked, it's going to get a little more political around here between now and November. I'm also encouraged, contrary perhaps to my colleague from Massachusetts, I'm encouraged by your comments yesterday that there will be broad changes to the Basel III proposal, which, as it's currently proposed, would have significant detrimental impacts to credit cost and availability to small businesses. And lastly, I commend your answer yesterday that the Fed is not a climate agency, and considering the impact of climate change is not a factor in achieving your given mandate, congressional mandate, of maximum employment and stable prices. Mr. Chairman, I recently joined many of my colleagues in writing to you about my concerns about the long-term debt proposal that would mandate regional banks issue new long-term debt. I'm concerned that this will have a disproportionate impact on smaller regional banks because they're required to hold their long-term debt at both the parent holding company and insured depository bank levels. Could you explain how this aligns with the tailoring requirements set forth in the financial reform bill that we passed back in 2018, Senate Bill 2155?
So have a longer term debt proposal aligns with that? So first of all, that's been out for comment on that one. The comments are in, we're reviewing it. So I don't want to say too much, but the theory of it in the first place was that those banks are not subject to the living will process to the extent that the GSIBs are. And this was sort of meant to be a middle step to make them more resolvable without imposing all of the burdens that we impose on the 8 GSIBs to have very elaborate resolution plans. So that was the thinking. I think on the calibration of it and all that, we have voluminous comments. We're looking at them, and we'll make an assessment and move forward as appropriate.
Well, thank you. And I know our smaller regional kind of banks would be happy to hear that thoughtful deliberation, Mr. Chairman. Understandably, you've had to raise interest rates to fight the fires of inflation brought on by reckless Democrat spending. However, a major side effect of that is the impact the rising rates are having on the cost of servicing the out-of-control national debt. Senator Haggerty alluded to this a bit in his questioning minutes ago. Looking at CBO reports, interest payments on our debt will increase 32% this year and will now exceed spending for the entire Defense Department. I have significant concerns, many do here in Washington, many Americans do, that we eventually reach a point where fiscal policy and monetary policy converge, meaning that the Fed would ultimately have to worry about the impact rate setting would have on government debt or even potentially the risk of a default. Chairman Powell, I know fiscal policy is not in your purview, but could you ever foresee a situation where fiscal irresponsibility snowballs to a point that the Fed would have to factor this into its decision-making?
I think we're a long way from that, and that's a real that's a terrible place to be. That's a place where some poorer emerging market countries have found themselves over the years. For the United States to get to that point, I think it's unlikely. But I do think that, and it's not our business, we should stay out of this fiscal business. But I'll say what other Fed chairs have said, which is we really need to get back to that discussion about fiscal sustainability, and both sides need to get together. The kinds of things that have to happen can only be done on a bipartisan basis. And so I really hope that we go back to a place where those discussions are happening again.
I've heard from a number of stakeholders about upcoming changes to liquidity regs, including a new ultra short-term liquidity requirement. As with any policy decision, establishing the facts matters. It's important that financial regulators have a complete, thorough understanding of the financial environment before releasing a half-baked proposal, rule, or guidance. My question is, what do you believe is a sufficient time period that would allow your agency to accurately calibrate new sound and reasonable liquidity requirements?
That is a great question, and one we're struggling with, particularly with all the other things that are going on. We're looking at some, and this is in response to Silicon Valley Bank, we're looking at some liquidity innovations, and we're asking ourselves, which form should that take, and how long should it be out for comment, and that sort of thing. We're not ready to do that yet, but that's the question we're asking.
Follow-on question, then I'm finished, Mr. Chairman. Will you confirm that prior to the Federal Reserve issuing any new liquidity requirements, it will first conduct all necessary data collection that would allow for meaningful analysis of all potential policy options?
And please keep your answer short, Mr. Chairman.
Maybe. No.
That's very short. Thank you.
I can't, we can talk about this more, but I don't want to make a really specific commitment like that without talking to the people who are, carefully in touch with this, but that is the right thought.
Thanks, Chairman.
Thank you. Senator Fetterman from Pennsylvania is recognized. Well, he got here last.
No.
So,
If
although
you-
if Senator Warnock sits down in the next 5 seconds, he's next. So Senator Warnock, are you ready or you want to go to War 5? You're all so generous with each other. It's Senator Fetterman's recognized.
Okay.
All right. Senator Warnock is recognized from Georgia.
Thank you, Chairman Banks. Thank you very much, Mr. Chairman. Bank spending on buybacks is rising again. And their consumer small banking revenue has sharply increased. Interest rates are high, yet the interest being paid to depositors, ordinary working families, working people with bank accounts. Not a lot of money in Wall Street accounts remains low. Chairman Powell, I'm concerned that when banks don't increase the interest rates on bank accounts, families are losing out on dollars that could be in their pockets. Again, they don't have the kinds of portfolios that some of the folks in this room would have. Is that good for the economy? And are you concerned that banks under your supervision are doing this?
Are not paying sufficient.
That's correct.
That's a question I haven't heard. Of course, they have the option of putting their money in money market funds, and banks compete with each other. But I'll be happy to look into that. I hadn't heard that concern.
Yeah, and I think it is worth taking a look at. Many lower income individuals and families, again, they don't have some of the sophisticated products yet. Money markets are available, but we saw high interest rates and that not being reflected in what depositors are able to benefit from. Could those individuals and families benefit from a high interest rate on their deposits?
Sure. And, it's for a long time, we had a lot of mail from people at the Fed, to the Fed saying, you should raise interest rates because we're not getting anything on our checking accounts. So we solved that problem.
I don't think we're asking for that, but given the reality, the question, yeah. So let me pivot. The monetary policy report states that while demand for housing has fallen, the strong labor market has kept prices high. That matches what I've been seeing in Georgia. Too many folks can't afford a home. According to the monetary policy report, mortgage rates were averaging around 7% last month. That's tough for lower income home buyers. Increases of just a percentage point or two can be the difference between owning a home or not. Are you concerned about this interplay between lower demand yet stubbornly high prices and what it means for folks trying to buy a home? And what do you think is driving these high prices?
So the housing market is in a very challenging situation right now. You have this longer run housing shortage, but at the same time, you've got a bunch of things that have to do with the pandemic and the inflation and our response with higher rates. So you have a shortage of homes available for sale because many people are living in homes with a very low rate mortgage that they can't afford to refinance, so they're not moving, which means the supply of regular existing homes that are for sale is historically low and very low transaction rate. That actually pushes up prices of other existing homes and also of new homes because there's just not enough supply. The builders are busy, but they're running into all kinds of supply issues still around zoning and workers and things like that. So it's quite challenging. And of course, rates are high. So people who are buying, a lot of the buyers are cash buyers or are able to actually pay without a mortgage because mortgages are expensive. I will say the first problem, the longer run problem of supply, is a longer run problem. The other problems associated with low rate mortgages and high rates and all that, those will abate as the economy normalizes and as rates normalize. But we'll still be left with a housing market nationally where there's a housing shortage.
There's no question we have a supply issue, and this issue of high prices, lack of supply, of course, disproportionately impacts some communities more than others. According to the Monetary Policy Report, the employment rate for the Black prime age labor force, that is persons between 25 and 54 years of age, reached a historical peak in 2023. The gap between Black and white prime age employment dropped to a nearly 50-year low at around 3%. We can appreciate progress, but a 3% gap is still significant. Would you agree that it is important to continue focusing on narrowing this gap? And if so, what tools does the Federal Reserve have to do this work?
It's very important, and the single best thing we can do is get prices under control, get inflation under control, so that we can have a long expansion with, the record is clear that a long expansion really gives significant benefits to people at the low end of the income spectrum because the labor market gets very tight, inflation is low, and they benefit more than anybody. So that's where we were before the pandemic, and we'd like to get back to that place.
Thank you so very much. I think there are some other legislative tools that Congress could use, and I'm happy to continue to work with the chair in the ways that we've already done to improve that difference. Thank you.
For sure. Thank you, Senator Warnock. Senator Lummis from Wyoming is recognized.
Thank you, Mr. Chairman. Welcome. It's nice to see you, Mr. Powell. My first question is about CDBCs. There's been some chatter lately on the social media that people are concerned about the Fed creating a CDBC without legislative authorization. You and I have discussed that before. And as you know, there are other means other than a CDBC that could use digital assets to create a secure and instant payment system other than a CDBC. So the question is this: do you still agree that the Federal Reserve cannot introduce a U.S. central bank digital currency without congressional authorization?
Yes, I do.
Thank you. That's really calms people's fears, the people who are concerned that we could end up with something like the digital yuan that is used as a means of surveillance. So I think that will calm some of those discussions down. Thank you so much. My next question is about your core CPE. Now, as you know, there's a disconnect between how you measure inflation and how the American people see inflation, because the American people are spending their money on gasoline and food and rent, things that have gone up a lot. And they hear about these improvements in the economy that they're not seeing in their everyday lives. So can you explain what measures you use to evaluate inflation, and just explain to the American people why you don't factor in the things they spend money on every day, like food and gasoline?
Actually, we do. Our statutory target is inflation. It's not core inflation. So, and if you look at headline inflation over the last 12 months, that's it. That's our goal. It's 2.4%. Core inflation is actually higher than that. It's 2.8%. And the reason is that some energy and food prices have come down, and those don't count in core. So our overall legal target is headline inflation, which is, it's our best effort to capture the cost of living that people face. It's not perfect. You have to make all kinds of judgments that aren't easy. I mentioned that the housing earlier. How do you measure housing inflation? Lots of issues, but that's what we target. The reason we look at core, though, is that headline inflation tends to be more volatile, and it tends to be pushed around by commodity prices, which really don't relate to the overall state of the economy. Is it tight? Is it loose? So core tends to be a better predictor of overall inflation than overall inflation is. I know that's complicated, but ultimately, though, our target is headline inflation, which does include food and energy.
Mr. Chairman, I'd like to include a letter in the record that Senator Tillis and I and 2 Democrats on this committee have submitted with regard to Basel III. My question...
Without objection.
Thank you very much. My question is this: what do you think is more likely, that it will be harder for consumers to buy a house and small business to obtain a loan under Basel III, or will lending just migrate outside the banking system, which may be harder to assess because it's opaque?
I'm sorry, I didn't get your question. I
Okay,
apologize.
so with regard to Basel III,
Yeah.
If there are more constraints on lending activity, what is more apt to be the consequence of that? That it's harder for consumers to buy a house or a small business to get a loan, or that lending just migrates outside of the traditional banking system?
So if there were anything that constricted credit in the banking system, they would probably be both things. Probably there'd be fewer loans made, but in addition, there would be non-bank lenders that are more than happy to make that loan.
I have a chicken and the egg question here. Starting with TARP in 2008, there has been a very aggressive printing of US dollars up until today, and it particularly went on hyperdrive during that 22-month period of COVID. So my question is, which comes first? Congress spending more, and so you respond by printing more money, or are they separate considerations?
I think it's hard to get my mind around that question. We don't print money to fund the deficit. That's not what happens. But when the government borrows, it issues, basically the government borrows to fund deficits is what happens.
Right. And so so that would indicate to me that you do respond, because we, in deficit spending, are creating a demand to borrow, and you're responding by...
Well, we're not making loans, though. We're not lending money to the government. We're not financing these deficits.
And so there's no chicken and the egg relationship?
There's not really, no. I'd have to think about this. I got to think about the way the plumbing. Why don't we continue this?
Yeah, I'd love to. And your thoughts earlier about fiscal sustainability and how we can work with you and bipartisan, maybe next year, to address these issues. When you say things, you have to be careful, because what you say has ripple effects outside of this building. But it would sure be nice if we could sit down with you on a bipartisan basis and have those discussions in a frank way.
Thank you, Senator Lummis. Senator Fetterman of Pennsylvania is recognized. All right, Senator Van Hollen of Maryland's recognized.
Let me start by thanking Senator Fetterman for his allowing me to to question. Yeah, Mr. Chairman, good to see you. Real wages are up, right? That's good news.
Yes, over the last couple of years, wages have been going up more than inflation. Real wages broadly are up.
That means more families have more spending power in their budgets, right?
Yes.
Worker productivity is up, right?
Yes, it is.
Corporate profits are up, right?
I believe so.
And worker productivity is rising faster than corporate profits, right?
I don't know the answer to that. That may well be right.
The charts I show suggest that. So that would indicate that unless corporations decide to pocket as profits more of the gains they get from their workers' labor, that we should be able to continue to have increases in real wages. Is that right?
Yeah.
And so it's important, I think, that people recognize that these corporations are doing better than ever, and they are deciding now to essentially return the gains made through their workers' productivity, which is going up, more to shareholders. Obviously, shareholders are going to get a profit, but the question is whether or not workers share in that profit to the extent of their worker productivity. And as you know, we've seen a great gap over decades between rising worker productivity and real wages, and we're hoping to close that gap. Would you agree that it would be good for a more inclusive economy if worker wages tracked worker productivity increases?
I think if you include benefits, that's a significant part of that gap. I've looked into that, but not for some years. But I mean, generally speaking, people's compensation should be over time equal to increases in productivity.
I appreciate that. And I also want to, there's the trade-off on workers' wages, and there's also an issue with price gouging, right? So we have seen record profits. We've also seen very high prices these corporations are charging for things like groceries. Now, I listened to a little bit of exchange with the chairman earlier, and of course, I think your answer was, people will charge what consumers will pay. But it should be known that these corporations are reaping much larger profits now than they were pre-COVID, for example, right?
I mean, some of them are. I'm not super focused on individual corporate profits, but yeah, corporate profits, I gather, have been high overall.
Right. I mean, they're high for a couple reasons. One is that they're charging consumers, for example, at the grocery stores, a lot of money. And the other would be if they're not sharing the benefits of labor productivity with their employees. So I think because we've heard a lot of claims by some of our Republican colleagues about the causes of price increases. And I think it's very important that American consumers recognize that corporations are choosing to charge them more at the grocery store or engaging in things like shrinkflation rather than in order to have more of their profits. Let me turn briefly to a letter that I sent to the Vice Chair of Supervision and some of the other federal regulators in January of this year regarding the Basel III capital requirements. And I support the overall effort on Basel. We did raise concerns with respect to a specific issue, which is the harmful and we think unnecessarily harmful impact it could have on clean energy tax credit investments. And all of the regulators testifying that day, including the vice chairman, said they recognized this was a significant issue and hope to address it. Would you agree with that?
Yes, I would.
Thank you. Thank you, Mr. Chairman. Thank you, Senator Fetterman.
Thanks, Senator Holland. Senator Fetterman of Pennsylvania is recognized.
Yes, I love that. All right. So it's great to be here with you today. Now, I don't know, maybe some people in America, we're talking about a cookie that was $18. And I was alarmed, and I hope we investigate that there is a cookie that cost $18. And do you believe that an anecdote on Twitter about a cookie that cost $18, is that reflective of our economy and where we're at, or not?
I certainly hope not. I don't do much shopping these days, but that sounds like a pretty expensive cookie.
Yeah. And now, I believe that, that the American economy now is the envy of the world after everything right now, correct?
Yes, we're performing very well compared to our peer group.
Yeah, pretty great. And is it fair to say that the stock markets are all up at record highs, right?
Pretty close.
Yeah. And inflation has been pretty effectively addressed, right?
It's been coming down sharply since the middle of last year. Yes,
Yeah,
we've got a ways to go on that, but we've made a lot of progress.
And corporate profits are pretty robust. Is that fair?
I believe it is.
Okay. Well, we can agree that, and I don't understand why more people seem to be talking about a cookie that cost $18, but that seems to be against the evidence as well. But given that, now, since things are pretty great, and we're in a really great, excuse me one second, place, but now I am concerned, and there's rumors going around that Basel, they're going to change, and they're going to reducing the capital, and I guess I'm concerned about that, because I don't know why we would want to, and also I want the record to reflect on, you're much smarter than I am. But I would be concerned that things are in a really great place right now. We can all agree on that. I would be concerned to change something like that, because I wouldn't want to have something again like what happened with SVB. And I just wanted to get your take on that. Is
Sure. So U.S. banks are well capitalized, and generally speaking, they're quite well capitalized. And we're not talking about reducing current capital levels at all. Really, in the Basel III endgame, capital may well go up. And what we're talking about is whether the proposal that was put out by the bank regulatory agencies, including the Fed, and which has now been the subject of quite a lot of comment, whether, what changes will be appropriate to that. That's what we're talking about. We're not talking about reducing existing capital requirements.
Oh, okay. Well, and then I also want to play off of a comment made by my colleague from Tennessee, and I actually agreed with him. And he's concerned about the deficit, about it's $1 trillion for every $100 days. So now, if the federal government had added $3.5 trillion to the deficit by extending the Trump tax cuts, would that increase or decrease inflation?
So I'm going to fall back on our long-time reluctance to comment on fiscal policy. We take your fiscal policy decisions, whatever they may be, we take them as they are, and we conduct monetary policy to achieve 2% inflation. But we don't score inflation. CBO does that. They'll make a judgment on that, but it's not something we do, because we're an independent agency, and that requires us to stay the heck out of politics.
So I don't want to put you on the spot, but would those kind of tax cuts, would that help addressing inflation or inflame inflation?
I don't know what the effects would be on inflation. I do know, broadly speaking, we need to get to a place where revenues and spending are better aligned. And I think everybody knows that. And, I think we used to talk about this a lot 10 years ago. We're not talking about it so much anymore. That's understandable. The pandemic was a special thing. But I do think it would be great to get back to that on a bipartisan basis.
Okay. Well, I have about 30 seconds left. I just want to go on the record. I think you've done a really great job. And I think our economy, and I do agree that it is the envy of the world as well. And I'm confused that more people are talking about cookies or McDonald's meals and those kinds of a thing. It's not reflective on the strength of this as well, too. And I just want to thank you for your service.
Thank you, sir.
Mr. Chairman.
Thank you, Senator Fetterman. That's the last questioner, and thanks for your generosity and yielding to colleagues who got here before, whom you got here before, if I said that right. Thank you, Chair Powell, for joining us today. Every 6 months and sometimes more often, I look forward to working with you continuing to work with you to strengthen our economy. Senators who wish to submit questions for the hearing record are due 1 week from today, March 14th. To Chair Powell, please submit responses to those questions for the record no more than 45 days from the day you receive them. Thank you again for your testimony.
Thank you, Mr. Chairman.
All right, Chad. So that is the end of this. The meeting is finally over. Let me know what you guys think about this. We're gonna day trade a little bit. The market has tore up mostly since Powell began. Let me know what you guys think about this. And again, if you want to help your boy out, you can hang out, watch this day trade a little bit. Market's been flying up. Huge upward trend. Most things are moving up again today. Google really helping me out today. Google up a ton. I'm going to go ahead and take a little bit of profit off of that too. We dip on Google at about 133. All right, let me get that out of the way. We dip on Google at about 133. Just took a little bit off there. And yeah. Palantir, NVIDIA, and Meta goated. Yeah, NVIDIA, guys, is going absolutely ridiculous, man. Remember, if you want to check out my sponsor, check out Apex Funded Account Program. Apex right now has this ridiculous sale. And if you've ever wanted a big funded account, like if you've ever wanted $300,000 in funding or more, or over 150,000 in funding. Right now, it makes tons of sense to just buy one of those. There's universal $35 resets, and so what it means by that is like you can get the regular $300,000 funded account program. If you have to reset, it's only $35, noticeably cheaper than the $200 it costs to sign up, and so it makes a lot of sense. This thing is going to be going on for a little while longer. I don't know how long, but again, you could use my promo code. Remember, it's BT, just beginner trading BT all. 2 letters, BT. You can also use triple B, get 71% off. Again, what they do is they give you a demo and they test your skill. If you could pass the test, they fund you. If you don't pass the test, again, most day traders lose money. And so almost all day traders lose. So you could either put up thousands of dollars, which makes no sense trying to look cool trading, or you could try the futures market out. When you trade futures, I'm essentially trading the NQ price action. It's the same thing. If you look at the NASDAQ, and it really looks a lot like NVIDIA today as well. If we pull over my charts here and you look at NVIDIA got up to 922. A lot of rips and stuff like that. So we've been using engulfing candles a ton, but it's just such a bullish day. But again, you can day trade the Q, you can day trade the E-mini price action in futures. There's no PDT rule. You can day trade short. If you want to check it out, again, great way to help support the channel. There's the link. We're going to start day trading a little bit today on Apex. And again, we've been funded in 3 accounts so far, about 3. Yeah, we're looking at the SPY chart here. Let me put the NASDAQ up. Here's the Q. I want this one where it's just engulfing candles. Where's the SPY 5-minute chart? Yeah, we haven't really got any more engulfing candles on the SPY, but the SPY got up to 515s almost 515s. Well, yeah, this is you're paying taxes like an independent contractor, Matt. And so in that regard, it's much more similar. But again, this is just the NASDAQ ripped it up. We're trying to day trade this now. Yeah, sorry, I was in the background doing some stuff, but You get it. It just makes a lot of sense. The $300,000 combine, we're about 50% of the way there. We've got about 8,000 in profit on this account so far. About 8K. We built this script earlier that gives us engulfing candles signals. Meta. Yeah, I hear a lot of people talking about Meta. Meta is kind of mooning right now, too, if you look at Meta here. Meta flew up. See, I found the engulfing candles work the best on a 5-minute chart. But they don't always work. Like, they're not always going to work. But this one followed through. This one didn't. This one did. This one did. This one did. This one did. Look at that. They don't happen every day. You'll have to get it to where it sets an alert. Look at that one. That one's powerful. Boom. Big rip afterwards. So a 5-minute chart seems to be the way. Let's check NVIDIA. We've been building this script all morning. Sorry, my dog Bruce. We got contractors here working, so that's what's going on in the background here. Sorry, chat. Sorry, chat. Bruce, Big Papa Bruce is yelling over there. He's saying, "Alert, intruder!" You know. Here, I gotta close this door. Man, again, the market's just up so much today. Like, it's up so much. I'm nervous on I'm going to short this. I know it's kind of risky. I'm going to take a couple contracts here, maybe 2. I think the market's just up so much right now that I think it's going to be due for a pullback. Like, we've already got an $8,000 cushion on this. We're trying to get funded in a 300K combine. So we could take some size here at the top and just see if we start to finally get a reversal here. Flat on the trade. It's not easy to call the top of this too, especially with stuff like NVIDIA just shooting up. We're going to try to keep our losses small. Again, here's the P&L on this challenge account. We're about halfway there. We need 20. Yeah, but Rhythmic, you can use Quant Tower. Like what I'm using right now, K is Quant Tower. So you can use Rhythmic with a lot of different stuff, not just Trade Evade. I have 2 funded accounts on Trade Evade, and then once this last one finalizes, that'll be 3. 1 on Rhythmic, 1 on Trade Evade. All right, so we're up about 60, $100. Let's see if we get a little bit more out of this trade. I'd like a little bit more. There we go. All right, we took 40% of the position off there, locked it in. And we're letting the rest break down a little bit. I could maybe add some back if we bounce up like we're doing now. See if I could fix my average a little bit. There's 4, 5. It's kind of trading against the trend here. I'm not a big reversals trader at all, but like I think with how much we're up, I could maybe take like a pretty small size here, and if we do go in my direction, I think the risk to reward could be good. Again, do not copy me, not an investment professional. I'm not liable if you lose, and remember, I have no idea what I'm talking about and might be wildly wrong about everything I say, especially when markets are at highs like this. Like, just don't copy me. Yeah, I could hope we double top again. I'm gonna set about $1,000 max loss for this trade. See if I could add some to it. And get in the problem if it breaks highs, it can really run. So I gotta just be careful. Testing my max loss now. Dipping all the way back down. Yeah, the problem is Nvidia's ripping up, so we broke a little bit over my max loss. That's all right. It's our first major pullback of this. Oh my gosh, dude. Bruce never shuts up, man. And it's frustrating when I'm in a trade and Bruce won't stop barking. I mean, he's doing what he's supposed to, so I can't get too mad at him, you know. But still. Yeah, it's just the middle of the day. Like we've already built up so much profit on this one. I don't want to give it all back. You know, so we're still up about 7K in this. So we're up about a third of the way there. You know, and the market just, I'm probably dumb for trading against the trend. Apple's pretty flat. If you look at Tesla, it's kind of flat on the day too. But Nvidia is just tearing up. You know, we've been in this upward trend for so long. Yeah, he could be telling me to shut up. He probably hears me in here too. Dogs have super ears. You know. But man, Nvidia just flying. Seven times the hearing. Yeah, I'm watching the regular E-mini as well. Q is just making crazy moves. Palantir finally starting to dip down. Is the music better? I needed some music. I was getting kind of... Market today is absolutely insane. No earnings calls. Yeah, I don't really think we have any. I don't know whether to just kind of like stick a blanket over Bruce. You know? I'll be right back, guys. I'm gonna like try to put a blanket over his head or something. Not over his head, over his crate. Okay, sorry. So I'm in the E-mini right now. Again, if we bounce up, I might add another 5 contract position here. But I also might just hold the rest break even. We've already made most of our money, or all the money we lost back, plus a little bit more, and now we've scaled out of most of it. Problem is, Nvidia's still kind of in this trend. To this and still aggressively attack this short, or cut this and wait for a more favorable looking chart. Here's my graph on the day. I guess I'm gonna cut this. It's just too risky looking. So we're up about 10, maybe a little bit less than 10, about 9.5. So again, we're about 50% of the way there. Yeah, sorry, I was on mute. All right, so we're about 50% of the way there. And again, we are trading right now. Again, the benefit of what we're doing right now, we're trading a rhythmic plan. We are trading the largest one that they have. Which is the 300K one right now. Again, the 70% off sale makes this about $200. 71% off sale makes this about $200. But the benefit of this is it's $200, but to reset it's only 35 bucks. I don't know if I want to short this or not. And so that's the big edge, is that to reset it, it's so much cheaper. It's 35 bucks, right? So you can basically pay for that one time and then keep trying until you pass it for only 35 bucks. I think that's a big value. That's a big benefit. And again, they're a sponsor. I'm biased, of course. I can't guarantee you're gonna make money. Nobody can. If you wanna help your boy out, you can use this link. Why are you streaming so late? Well, the Jerome Powell press conference just ended. Hello. Hi. All right. Yeah, I like this stagnation pattern here, but I'm gonna start it small with 5 contracts. So we're gonna start small with 5, maybe add up to 10. If we get a bounce up to this spot here, we're not gonna add over this spot. We're gonna use that level as kind of like a, and if we break down more, we'll add some more to it as well. BITO, isn't that? Yeah, that's the BLK ETF, crypto ETF. I like the stagnation pattern here. Problem is Meta's going crazy. This is me on my... Alright, so the stagnation pattern worked. I have a bad feel here on this, but that's alright. We caught the breakdown that we wanted just based off of just too much extension there. We're basically up 11. Yeah, about 11. Question is, does Nvidia continue to fall? Yeah, Palantir. Sorry, Powell testimony is not in progress anymore. Let me see where I'm at after commissions on this account currently. Okay, so yeah, after commissions, I'm up 10.4 today. So, not too shabby, we'll take it. Again, we just need another 9.5 and we're there. I'm gonna start shorting into this, even though my fills haven't been the best today. It's been kind of choppy. It's the middle of the day, and this is also the E-mini. But we'll take up to maybe 8 contracts here. There we go. Maybe 10, I guess. Alright, just lock that in. So we got the follow through breakdown. We'll take that. Remember guys, tomorrow we got payrolls too, so we do have payrolls tomorrow. Nah, I'm not gonna do a race. I don't want to rush it, Sam. You know, like, again, here's my stats of the day. We're right in the middle of the day, brother. We're right at like 90. It's not even 1 o'clock yet. We're right at the noon lunch hours. So, you know, while I've been pretty accurate today with this one, you know, we got a 3.87 to 1 win-loss ratio here. I don't want to rush it and test it. I would rather take it slow and steady and try to get the second, you know, the second like 40% left or whatever it is, the second like 45% left tomorrow. Is what I'd rather do. So I'd rather just kind of chill and probably not push it today. Just because, you know, again, I'm almost there. You know, we're over halfway there. So, hope that makes sense. Again, if any of you guys ever think about signing up, use my promo code BT, coupon code BT, beginner trading, all one word. You know, you can check out my other sponsors today. Again, my other sponsor is a company called Chart Prime. It's a trading view service. You can use it stocks, crypto, Forex, futures. You can use it on anything with the symbol on trading view. It can just be a powerful service, a powerful indicator. Again, look at the strong signals. Like, genuinely look at the strong signals. Like, look at all of these. Like, all of these. Like, look, let's back test this really quick. This is a 5-minute chart on the NASDAQ, which is what I'm trading. Look at the buy signal. Beautiful bounce. Strong signal. Beautiful drop. Look at the buy signal here, literally called the bottom. This one didn't work, but look at this strong signal showing up. Beautiful bounce. So that is 1, 2, 3, 4, 5. So that's 80% accuracy today. 80%, 4 out of 5. You know, that's not bad. Again, it can keep going back. Sell signal drop, strong buy signal bounce. Sell signal drop, strong buy signal bounce. You can use these on any time frame: 1 minute, 3 minute, 15 minute. Anything with the symbol on TradingView, you can use it. Just really useful. They have all these other services too: back testers, oscillators, screeners. You can use all this stuff. It's like $40 a month to get the Oracle. Anything with the symbol on TradingView, stocks, crypto, Forex, futures, it works. Check them out. Great way to help support your boy here on this channel. I'll put the link up. Here's the link for that. Yeah, I'm just not trying to give it back. But again, if you want to check out Apex, links for that in the description. I'm going to go ahead and get out of here. Again, I don't feel like chopping this back and giving it all back. But yeah, guys, I'll see you guys later. Y'all be good. See you guys later. We'll see what the market does, man. Q's up a ton. Again, I don't really feel comfortable buying it because we're up so much on the Q. I don't really feel comfortable shorting it because we're so strong on all these tech stocks today, Nvidia, Meta. I'm just not really trying to give it all back, you know. A lot of tech stocks and AI are green, though, today. Like, I'm green in a lot of tech stocks. So I just don't feel comfortable giving it all back. I don't want to give it all back to the market. I'd rather just take my profit and ride off into the sunset than continue trying to push and trade and lose more, you know. When you buy a challenge, do you get downloads for terminal? What do you mean? Well, in actual profit today, just to put this in perspective, guys, in actual profit in equities, I am up $292 in stocks, basically. In a futures combine, I am up 11,000. You know, and again, we're trying to get funded in the $300,000 one, which costs $200, but for the time being, resets are only $35, which again, a lot of people don't understand how beneficial that is. Instead of paying $200 to reset the $300,000 win, which is how much the $300,000 win costs, it only costs $35. So you can basically keep resetting for only $35 until you get funded with $300K on Apex if you do it right. Can't guarantee you will, of course. It all depends on your trading. And yeah, I'll see you guys later. Y'all be good. Cry about it, Steve. You'll be okay, you know. Most of the time, people like Steve are people who, like, they don't ever say anything else besides critical things. They're just kind of sitting around. So, I mean, listen, let it out, bro. It's all right, Steve. You know, again, remember, I'm not an expert. I'm super biased. in my sponsor's favor, of course, because they pay me money. You know, this is my disclaimer, guys. Remember, I'm terrible at this stuff. Have no idea what I'm talking about. Might be wildly wrong about everything. And listen, Steve, it sounds like you agree, bro. So thanks for engaging with my content, sir. I'll see you guys later. Y'all be safe. Later, guys.